Good evening, everyone, and thank you to each one of you for arriving at the Dhanam BFSI Summit 2022 in time. We are about to begin, and any of our guests, dignitaries who are still outside the main hall, please do gather inside and occupy your seats. We are about to get our evening started. Thank you. Nair on violin, and Sandeep Mohan on guitar. A louder round of applause for them. They'll be enthralling us more later this evening. What a delight it is to watch this august audience in person, live from this stage. You know, exactly 2 years after the world had shut down because of a virus, Dhanam Publications, which is renowned for organizing mega business events to promote business excellence as well as entrepreneurship, is back with a bang. Good evening, everyone, and a hearty welcome to the Dhanam BFSI Summit 2022. I know your coffee hasn't reached you yet, so there's a little lack of energy in your claps, but I really hope that it'll pick up pace during the course of this evening. This is the 4th edition of the Dhanam BFSI Summit, and this is one of the biggest of its kind in South India. And this year, along with the physical event that we are witnessing right now, we are also streaming the event live online, digitally. So that's double bonanza this year, and the first time it's happening. And this summit will offer the perfect platform to gain an overview of the financial scene in the country and also help formulate the strategies to manage change and grow in these highly volatile times. And that's exactly why the theme of this year's summit is managing change and growth in challenging times. So today we have an exciting lineup of speakers for you, and from banking, insurance, investment, and NBFC sectors, and they'll all speak to you about new trends and disruptions in the financial sector and explore new ideas that can benefit individuals, professionals, and business people. Dhanam needs really no introduction to all of you, but still, started in 1987, Dhanam is a pioneer and a trendsetter in business journalism in Kerala. With a successful track record of more than 34 years now, Dhanam is now a new age media company which offers a wide range of products in print, digital, mobile, audio, and not just physical events, online events as well. It is the positive perspective that sets Dhanam apart and helps Dhanam play a key role in developing Kerala's business landscape, and we are extremely, extremely proud about this. So without any further ado, we are kickstarting the Dhanam BFSI Summit 2022, and to welcome all of you officially, may I have on stage Ms. Maria Abraham, Executive Editor and Director of Dhanam Publications. Welcome, ma'am. And just so truly excited to be back on the Dhanam stage. Let's hear it for Ms. Maria Abraham.
Distinguished speakers of the day, Mrs. Mini Aib, Managing Director, LIC, keynote speaker, Mr. Saurabh Mukherjee, Founder and Chief Investment Officer, Marcellus Investment Managers, other eminent speakers of the day, our esteemed guests and delegates. Good evening to you all. It is a delight and privilege to see the captains of BFSI industry and the stakeholders in one platform after a gap of 2 years. Corona separated us for almost 2 years. Now that things are getting back to normal, we are happy to be back with our annual prestigious Dhanam BFSI Summit, both in physical and digital platform. As you know, the BFSI sector plays a key role in the development of the economy. Kerala is home to several prestigious private banks, top NBFCs, and a fast-growing investment community in stocks, insurance, and other new age financial products, including cryptocurrency. A pioneer and trendsetter in business journalism, with a successful track record of service for more than 34 years, Dhanam is happy and proud to host this unique summit with the finest finance professionals in the country to help accelerate the progress of the BFSI industry at large. We also organize other path-breaking national and international events that create memorable learning experiences and networking opportunities. Other flagship events include Dhanam Business Summit and Award Night, Dhanam Retail Summit and Award Night, Dhanam MSME Summit, and Dhanam Family Business Conclave. We are fortunate to have with us today an array of top and brilliant financial professionals in the country as speakers today. They include Mr. Emma Kumar, Chairman LIC, Mrs. Mini Aip, Managing Director LIC, Mr. Saurabh Mukherjee, Founder and Chief Investment Officer, Marcellus Investment Managers, Mr. George Alexander, Managing Director, Muthoot Finance, Mr. Porinju Veliath, Founder and CEO, Equity Intelligence, Mr. K. Paul Thomas, Managing Director and CEO of ISAF Small Finance Bank, Mr. Prince George, MD and CEO, DBFS Securities, Mr. Sharik Shamsuddin, Founder and CEO, MarketFeed, Mr. Sanju Soni Kurian, Co-Founder and CTO, Vault, and Mr. Abraham Tadian, former Executive Director, South Indian Bank. We extend a very warm welcome to all the distinguished speakers. We are glad that there is an overwhelming response to the summit despite limiting the number because of earlier COVID curves. A record number of people are attending through online. I extend a hearty welcome to all the delegates from Kerala, outside Kerala, and from abroad. A special welcome and thanks to our sponsors who made this summit a reality in these challenging times. Wish you all enlightening sessions with some of the finest BFSI professionals in the country. Thank you.
Thank you, ma'am, for doing the formal welcome of this august audience and our dignitaries. And now we move on to the formal inauguration of this evening of the Dhanam BFSI Summit 2022 with the lighting of the lamp ceremony. I'd like to bring on stage our dignitaries, starting with Ms. Mini Aip, Managing Director of LIC of India. A loud round of applause as our dignitaries walk on stage. Mr. Saurabh Mukherjee, renowned author and founder of Marcellus Investment Managers. Yes, he's on his way. Mr. Kurian Abraham, of course, our Chief Editor and Managing Director of Dhanam Publications. Mr. K. Paul Thomas, Managing Director and Chief Executive Officer of ISAF Small Finance Bank. He is also on his way. He will join us soon. Mr. Porinju Veliath, Founder and CEO of Equity Intelligence, a long-standing pillar of support for Dhanam Publications. Also glad to invite on stage Mr. Prince George, Managing Director and CEO of DBFS Securities. Mr. Abraham Tadian, former Executive Director of South Indian Bank. Mr. Sharik Shamsuddin, Founder and CEO of MarketFeed, the young star. And Mr. Sanju Soni Kurian, Co-Founder and CTO of Vault. Hearty welcome, Sanju, and all the other dignitaries as well, as they join in to mark the formal inauguration of this stage. Thank you for joining us on stage. We'll bring all of you back one by one later in our knowledge sessions. May I request the stage to be set for the first knowledge session? Can we have the volunteers set the stage for the first knowledge session, which is a panel discussion? We need the chairs to be arranged. We also want the lamp to be removed from the stage. And while we wait for that, it is impossible to start this evening without remembering with gratitude that set of people who made this evening possible, our gracious sponsors. Muthoot Finance is our presenting sponsor. We are so glad that we have found this support in you. You've always been a great source of support for us. And also our silver sponsors, Manappuram Finance, ESAF Small Finance Bank, Reliant Credits, Niravath Jubilee Chits, Kerala Bank, DBFS, and our OOH media partner, Aishwarya. Yes, the stage is being set. We should just about take 1 more minute for that. And this first knowledge session, as I mentioned, is a panel discussion on understanding share markets and cryptocurrencies in these challenging times. You know, what investors should do. This is, a topic can't get hotter than this, no? Talking about share market and cryptocurrencies in this first panel discussion, which is being moderated by our long-standing friend who just came on stage to be a part of the lighting of the lamp ceremony as well, an accomplished banker who was the former executive director of South Indian Bank, and prior to that he was with Federal Bank in various capacities. He rose through the ranks by handling multi-dimensional assignments and various projects. General manager, he was also heading the international banking and foreign exchange department for 15 years at Federal Bank. He's also very active in various social and cultural forums, and he's currently the chief patron of State Forum of Bankers Club, Kerala. He's also an independent director of ESAF Holding Company. Very, very proud to present to you Mr. Abraham Tarian, who is the chair of this panel discussion. Please come on stage, sir. Should I introduce the other panelists, sir, or would you want to do the honors? Yeah, all right. When a tech company came forward with the largest IPO of this country, this man had warned that this isn't a good idea to invest in it, with a valuable caveat. Share market isn't a place where money doubles magically overnight, and we all listen to his advice still. A prominent figure in Kerala's corporate broking arena, who started his firm exactly 3 decades ago in 1992. Very proud to present to you Prince George, Managing Director of DBFS Securities, the first panelist joining us on stage. Our next panelist is an entrepreneur, stock market trader, and a social media creator whose life mission is to increase the penetration of stock market in India and also help public generate income through, from the market. He's a graduate of NIT Jamshedpur, and he has brought lakhs of people to the world of stock investing and trading through his highly popular YouTube channel. He co-founded MarketFeed and has raised more than 2 million from VCs and angel investors. Very proud to present to you Sharik Samsuddin. Welcome, Sharik. Oh, sure. We're still waiting for the third chair to come in. Meanwhile, Sharik is also a TEDx speaker. He spoke on the topic, how everyone can achieve financial freedom. He's an active options trader and has trained more than 5,000 traders and helped them make profits from trading. We're still waiting for that next chair to come in. Yes. And to rightfully take that chair, joining us on stage is the Chief Technology Officer and co-founder of Vault, a Singapore-based crypto lending and trading platform, Sanju Soni Kurian. He's working towards the acceleration of transition towards decentralized money by enabling more banking touchpoints in the crypto world. What a fantastic array of people, business leaders and professionals on the stage. Now I'd like to hand it over to Mr. Abraham Tarian.
dignitaries, esteemed guests, the panel members, Prince George, Sharik, and Sanju Soni Kurian, and dear friends. Today, our discussion for the panel discussion is on understanding the share market and cryptocurrencies in the challenging times, what investors should do. So before I start the discussion, basically what we are going to do is I will talk for 5 minutes introducing the subject. Later, each speaker will take 5 to 7 minutes. After that, there will be a discussion. The questions can be there from the floor, and accordingly we can proceed further. As far as share market is concerned, today it's a very matured market. We have gone through the difficult periods over many, many decades. Everybody has become so matured, so many organizations, the regulators, everybody has become much more wise. Difficult periods we can manage at any point of time. Even today with the Ukrainian war and things like that, the market has been so strong and going steady. Uncertainties are always been there, but things are being managed well. And this is going to continue, and the very culture of the equity has come to the common man's investment portfolio also. So we have Sri Prince, who will be handling the part relating to the shares, equity, and I don't think I should give more details into the equity market because everybody knows there is no introduction required for that. But as far as the case of crypto is concerned, the people are very unsure. Even the regulators, even the players, even the intermediaries, everybody has some amount of a confusion and lack of clarity is there in case of crypto. I will give a small background of the crypto before we go to the panel discussion and inviting each person in the panel. Crypto, the Bitcoin is the first and most popular cryptocurrency started 12 years back in 2008. Until 5 years ago, the market capitalization of all cryptocurrencies together was only $20 billion. That is in February 2017. This figure has gone up to $289 billion by February 2020. And reached a peak of almost $3 trillion by this time. Bitcoin accounts for more than 42% of the market capitalization of the cryptocurrency. The top two accounts, Bitcoin and Ethereum, they together contribute more than 61% of the total cryptocurrency. The top 5 accounts more than 71% of the cryptocurrencies together. Bitcoin has given a return of 133% during last year. Ethereum has given a return of 553%. Solana, the third largest crypto, has given 16,000% increase. Of course, the base figure is very low. The appreciation of the crypto has been phenomenal. 52 weeks ago, the value of Bitcoin was $28,825. But it went up to $59,000 during this year. And now it is valued around $47,000. Many senior bank officials, government officials, regulators all over the world have been making negative signals on the fate of the cryptocurrency. China, the second most powerful country in the world, almost made a war against the crypto. They banned mining of the crypto. They made all transactions in cryptocurrencies of individuals and corporate illegal. Despite these actions and sentiments, the value of the crypto has increased considerably and the appreciation of the crypto has been phenomenal. Cryptocurrencies is slowly getting accepted as a hard reality by various governments, multinational companies. One of the Israel banks has allowed its citizens to trade in cryptocurrency. El Salvador government of South America has issued, the El Salvador government of South America has issued banks the bonds in cryptocurrency. LG Electronics is also talking about cryptocurrency and venturing into blockchain technology. Goldman Sachs has already featured cryptocurrency in their homepage. US has allowed ETF in crypto. US, Canada and Europe has made doors open to the crypto. Australia has started doing this. In fact, India was planning a legislation last year into the winter session, presumably to ban the cryptocurrencies, crypto transactions. But it was finally withdrawn, and in the budget speech, the finance minister on 1st February has announced that a digital rupee of the central bank, digital currency, CBDC, will be issued by RBI during the year 22-23. It was also announced that all gains made on the cryptocurrency will be taxed at the rate of 30% from the 1st of April, that is from day after tomorrow. They also have introduced a 1% TDS on all transactions relating to Bitcoin. In India, more than 10 crores of investors are reported to be dealing in cryptocurrencies, which is unbelievably high. The official version has been that most of the individuals out of these 10 crores are dealing in very insignificant quantities, which is yet to be confirmed. The question today is, what will be the government's stand on the existing cryptocurrencies when government itself is planning to issue government-backed digital currency? 2, what are the regulations that may be introduced on cryptocurrency, and what will be its impact on the common investor? How the common investor can protect his investment in the highly volatile market of crypto. Is it legal and regulated, or is it legal and unregulated as on today? Government has not been very clear on many of these aspects. I hope the experienced panelists will decipher these matters to the enlightened audience who have joined in large numbers offline and online. I wish a lively discussion on the crypto and on the share market. Thank you very much.
Panel Chair Abraham Tarian, co-panelists, Dhanam family members, large number of participants for this BFI summit, both online and offline. I am very much happy to stand on before you because we are all meeting for after a long time. And first of all, I would like to express my sincere thanks to Dhanam for organizing an event like this and inviting me to participate in this panel discussion. Now, the topic which I have seen here is share market or capital market? Capital market and cryptocurrencies. That is the topic for a panel discussion here. I really don't know whether there is any connection between these two things. You know, like I sincerely feel that at this point of time there are no evidence which suggests that there is a kind of connection between capital market and cryptocurrencies. Anyway, this is a subject which is here for discussion. As already told by the panel chair, I have to talk on capital market side. As you are all aware, capital market is not shares alone. It is fixed income product like bonds are there. Then we have an active forex market where currencies are traded. We have commodities also, where large number of commodities are also traded. So this is one side of the market. The other side of the market is where we have companies coming through IPOs. Of course, Madam is here, you know, like the LIC IPO is much awaited. So a lot of such things are there on the capital market side. Before going detail into the aspects of capital market, we all know that, you know, like what excites people is about the possibility of making good returns from any kind of investments. That's why when I saw the enthusiasm in the chair's speech about cryptocurrency, he was also enthusiastically saying that it created 200% returns and all. But the current way the capital market is functioning, it will be very difficult unless you are a very, very professional fund manager, it will be very difficult to generate that kind of returns. So what are we targeting to? First of all, let me make it very, very clear that I sincerely believe that, of course, in certain years, like with big volatile movements, you may be able to do 30 or 35%. But something above 15-20% is considered to be a very good return from a capital market point of view. That's what I want to tell you first. Now, as you all know, when the pandemic first hit the world, the first reaction came on the capital market side. We were seeing free fall on markets in India. If you look at the benchmark index, it actually fell from 12,400 levels to something like 7,600 level. And that too, it happened over a period of 10-15 days, like. Unimaginable fall happened and investors lost a lot of money. Many investors were panicked. This movement was happening not only in India, globally, that was the situation. And then we saw a very smart recovery on the capital market side. Of course, there are reasons which all of you know. Huge amount of stimulus packages were introduced into the economy. High amount of liquidity was injected by a coordinated action of central banks, which led by Federal Reserve, the US Central Bank. This led to a lot of surplus liquidity in the system. It supported the market. And then suddenly we saw a twist where we have seen corporates and governments and across the globe, like people are looking technology solutions to overcome this kind of lockdowns, like. So the technology solutions brought down costs under control. So the corporates have actually come out quite successfully. Those people who are able to actually migrate faster into the digital technology, they got the advantage, and they restructured their entire structure business model. Along with the lot of liquidity coming into the system, like investment managers and funds are all flush, and that led to a smart recovery in the market. Much ahead of the COVID lockdown, market have started moving up. And then you saw one of the beautiful movements from an index point of view, from 7,600 Nifty level, it went up almost in November or December last year, it went up to 18,600 levels. See, that is the kind of movement happened on the market, like. And the people who have invested during this period in the right stocks or in the right funds, they got good benefit. There is absolutely no doubt. They got better returns than our estimated returns of 20 or 25%. I am sure about that. But that is not the case we are talking about. We are talking about the impact of capital market over a longer horizon. Why are people putting money into? Are we putting money into the market for making a short-term gain or making suddenly becoming billionaires or millionaires? That is not the whole idea of capital market. The whole idea of capital market is it's a place where capital is generated for startups, for new companies, for companies which are planning for aggressive expansion, where there is free capital available, because capital is a key ingredient for any kind of economic activity. Let's understand that. So that is where we are seeing the role of the capital market. And over a period of time, the people who have invested through these IPOs, or invested for a long term, they start making money. And because these companies will start doing well, they will try to outperform the normal economic growth rate, like, and all these things. So it is very clear that any big movement in the market is happening if and only if there is an economic growth and economic activity is there, like. You can see companies in isolation doing wonderfully well, irrespective of the downturn in the economy, because their managements will be very good, or because they have some strategy, or because they are in the right segment of the market or the right industry, like. But in general, if you look at the performance of mutual funds, or if you look at the performance of a person who is putting a long-term capital through SIP into the market, major benefit is coming when there is an economic upturn also. I hope that, we have wonderful speaker like Saurabh. He is not seen here now. He was here. So he will be talking in detail about all these things. He is the right person to talk about that. Because my time is limited, I will not get into it. But few points you have to keep in mind. The economic growth rate was little bit decelerating from 2016 onwards because of a combination of things. Because we have introduced structural reforms into the market in India. Two structural reforms like demonetization and GST and all. Immediately after some time we have seen this COVID issue.
Then now finally we have the climax of Ukraine-Russia war also. So it's something like last 5-6 years we are seeing a lot of things which actually decelerates the economic growth. At one point of time during the pandemic, the growth rate was negative 23% one quarter, so then you understand, if the growth rate is negative 23, how on there people can make money, Definitely it is very difficult. I'm not talking about ordinary investors, even the underlying companies, they will be finding it difficult to make money. The growth rate is like that. But it is we all know the reasons because we are under lockdown during that quarter. But the beauty is that this year we came back to 8 to 9% growth rate. And I sincerely believe that even though a lot of people are skeptical about the high inflation, not only in India, across the globe, and because of which interest rates are going to go up, because of this corporate earnings are going to come down. These are all general things which are being discussed across TV channels and all. But I sincerely feel that given the current situation, there will be an uptick in our economic growth rates, and I expect a double-digit growth rate somewhere in FY25. This is my feeling. So I feel that the next 3 years, you will see one sector after another getting into a more profitable operations. As far as digitization is concerned, we all know that it is not the startups or it is not some company which is a disruptive company which is doing digitization. Everybody is doing that. We have a lot of technology there. So this is definitely going to help them. Even the government is doing that. We know that many of the things are now either Aadhaar linked or PAN linked or whatever it is, So people are a little bit skeptical about that also. But I am very much positive about these aspects because this brings efficiency. This brings down our cost also. There are a couple of points which we have to understand. The real economic activity, the biggest one of the biggest market, that is US, actually that is on a high now. But the problem is that they have brought down the interest rate to such ridiculously low level like 0% and all. Now they are back, they are planning to increase the interest rate. Now it is expected that we are going to see at least 6 interest rate hike in this financial year, in this current year, calendar year. And people are expecting at least 150 basis points higher interest rate 6 months down the line. So what is the impact of that? General belief is that a lot of money will flow back into a safe haven like American bonds, I agree with that, there will be some flow of funds. That is the reason why we are seeing large amount of FI outflows in this market. So some flow of funds has already happened and some more will happen, as and when the interest rates are increased. But is that enough for the global capital market and the Indian capital market to come down? Something say by 5,000 points in Nifty or something like that? I really don't think so, because the reason is, even a part of the money goes back into American bonds, it doesn't mean that we are not going to have sufficient liquidity in the system. The system is still flush with liquidity, and if the opportunities are there, if the earnings is picking up, if the company starts making good profits, money will again come back into the asset class. This is the beauty of investing longer term into the capital market. We all know that IPOs are a very, very important part of the capital market. In the introduction, I think the MC was talking about me advising against a tech IPO. Actually, I thought it was my duty to inform the investors about a recent tech IPO, which came a couple of months back. I have written an article. I have written in Dhanam. I have written in another magazine. A lot of people criticized me at that point of time, why you are writing like this, I said, I have written because I think, I am not against technology, first of all, let me put it, I am not against new technology also, but the way the IPO is priced, the way the hype is created in the market, the way the new generation media has actually created a hype, and I know that a lot of people, recently I visited Info Park here during the time of this IPO, and a lot of youngsters, like engineers, they came to me and asking me, we feel that this is a digital world, this IPO is going to do well. It's from 2000, it can go to 4000 and all. Now you know which is the company I'm talking about. I told them this is going to come down below 1,000, like it's not any magic or anything, because we know that there is a hype created. We know that the earnings is not supporting. We know that the promoters or the so-called people who are selling into through this IPO is trying to utilize a particular sentiment in the market. Please don't think that this is happening not only in India. It has happened across the world, in the US, in all over the world. Around 1,000 IPOs came during this, in this category. And many of them are at 50% prices now. Now, if that is the fate of the investor who puts money, it is our responsibility to talk to them at the right point of time. That's why I wrote the article. And I got a lot of criticism at that point of time. Now people are saying that it is okay, you have alerted us and we have not applied, or whatever it is. I don't want to get into controversies. Market is always like that. Market doesn't work on hypes and other things. Let's understand it very, very clearly. Market is such a beautiful mechanism. We have to respect the sentiments of the market, but we have to have our own strategies when we are going into the market. We should have our own priorities. We should have our own expectations about returns, our strategy to invest. If you are not in a position to actually do that, people are always saying better put it in a mutual fund or give that responsibility to a fund manager or portfolio manager so that he can do it much better than you. But the essence of investing in a long-term capital market like India, which offers tremendous opportunity, is still very much there. It can create wonderful returns for you, especially a product like systematic investment plan, SIP, which is very popular among retail investors. I think the people have made good amount of money in that SIP products. Again, I want to reiterate that I am not against IPOs. There are good IPOs coming. IPOs are something which is attracting new investors into the market. For example, the LIC IPO is expected to bring a lot of new investors into the market. And definitely those investors, if they stay invested, I am sure that someday they are going to make good amount of returns also. So such quality good IPOs should also come. Some tech IPOs can also be considered because the business model for this new generation businesses itself is a little bit risky. Some of them are going to do very well. Not that we can write off all the things. It's the pricing with which they are coming, the timing with which they are coming, it's the sector which they are in, and it is the caliber of the promoters that is what is going to determine the fate of these tech-driven IPOs. Now, I just want to conclude that I feel that there will be more and more participation on the capital market side. Already there is, and I sincerely feel that good IPOs and good performing markets in the years to come, more and more people will participate. I have already told you that I am expecting good positive returns from the market. Fundamentally because after this next 6 months, once the dust settles on the interest rate hike and inflation front, again, I want to tell you, inflation in India is reasonable and moderate. That is one very important aspect, and our currency is very stable also. So there are quite a few positive aspects for the Indian economy at this point of time. Needless to say that there is a worry regarding crude oil price going up substantially because of this war. But if that is also coming under control, I am sure that we will get back to double-digit growth, and people will have very good opportunities, again participating with the correct strategy in the market. So this is my conclusion. I think my time is over. If there are anything more, I think we can discuss during the Q&A session. Thank you.
Yes. Good evening. Yeah. Thank you, Dhanam, for the invitation for me to be here, and it's such an honor. I'm super thrilled, excited, honored, humbled to be here in front of such eminent personalities who I've always looked up to, right? To be here and to speak to you, it's such an honor is what I would say. Let me just get this right. Yeah, sure. So I really want to talk about a bit of perspective, a bit of clarity of thoughts in the world of stock market, right? So when I came onto the stage to speak about that, I was listening to my previous speaker, and a lot of discussions going around here where the terms like returns, crypto market, stock market being tossed around, being used in the same sentence. I don't really think they should be used in the same sentence like the way it is being done right now. I mean, how can you speak about 1,000% returns and a 15% returns, which obviously even Rakesh Jujumala or Warren Buffett endorses? We cannot use both of them in a single sentence, right? That's where a lot of perspective, a lot of clarity should come into the world of capital markets. And I strongly believe capital markets do include share market, currency, forex, and even crypto for that matter, right? I mean, you're putting your money to work, and that's exactly what capital market does. So what is that clarity required? And again, I'll use Porinju's quote here, right? Where you just need common sense to make money in the market. And I just heard that you need to be a professional fund manager to make money in crypto. Again, I'm not endorsing crypto here. I'm just clearing stuff out here because I'm a person who brought in lakhs of people into the world of stock market. And for that reason, I know by giving proper awareness, by giving proper education, anybody could trade well, invest well, and make money in the market. And that is the perspective I want to set straight today. I mean, think about that. It's as easy as finding a good asset class. Let's even talk about Nifty here, right? Just put your money into Nifty and just wait it out. Right? Do an SIP, just wait it out, and you're sitting on a pile of money at the end of 20, 30 years. That's history talking to us, right? And this is events like this, people like me going on media and speaking about micro issues every day. Nifty moving 100 points down, 100 points up. Why does it even matter if you're investing for the long term? I mean, it's just the media doing stuff they love to do, right? I mean, I think long-term investors, at least retail long-term investors, they shouldn't be concerned about it. And that's where, again, clarity of thought is super important. I believe there are two things to be done in the market. And everywhere I go, and even discussions here, are around investing for the long term only. Cool? That's absolutely okay. Everyone should invest for the long term. That's something I believe. Investing for the long term should be a fundamental duty is what I believe. Anybody, irrespective of the money they have, irrespective of their background, they can invest a small money every month into a diversified portfolio. Don't go behind those multi-bagger stocks. Don't go behind those sectors which could probably give amazing returns over the next few months, for few years. Don't do any of those research, right? Just invest whatever you can for the long term into a good diversified portfolio, a portfolio of mutual funds even, and you can make money. And that's what a normal retail investor should do, right? Long-term investing, everybody and anybody can do it. I don't think you even need common sense for doing it, right? I mean, it's just giving that mandate and making a lot of money at the end of the tenure. Now let's talk about trading, right? So as I said, long-term investment should be a fundamental duty. Everyone should do it for achieving financial freedom at one point of time, to have a large enough corpus by when they are 60, 55, so that they can live off that money. But where does trading come into the picture? Why shouldn't normal people do trading? Right? I'm a person who lives off trading. I'm an option seller. I aim to make 40 to 50% ROI every single year. Now, me as a trader, I wouldn't be happy if I make 15% from my trading activities a year. That's something I make from my long-term investment portfolio, right? When I'm trading, I aim to make at least a 40% ROI. Otherwise, if I'm only making 20% from trading, there's my 30-35% income tax, and what am I left with? So trading, when it comes to trading, I strongly believe trading is a business. You should approach and take up trading as a business. When you start, okay, let's talk about a businessman who wants to set up business in the country today. He's opening up a retail store, he's opening up an industry. He's putting his 50 lakhs, 1 CR or crores or lakhs into the business as a capital, right? And how much is he making? What is the ROI in a good business today? And that is how you should be seeing trading as what I think. So when I talk about myself, when I sell options in Nifty, I focus on making 40-50 ROI a year. So that is good returns on the capital I deploy for my trading business. So trading is a business which can give you cash flow, which can give you income. And you take that income, live off, use it for your expenses, and then you invest the remaining for the long term. I hope you get this clarity here, right? This is what I live by. I run a business. What business did I start? I started a trading business. I brought in a few CR for that business. Now I'm using that business. I'm making a few lakh rupees every month. Again, just examples here, right? I'm just making a few lakhs a month probably. And then I have all my expenses taken care of. The returns, the remaining, I put it in the market again for long-term investment. So here I'm probably making 40-50% a year. And here I'm only targeting 15%. So in any conversation regarding the capital market, regarding the stock market, there shouldn't be just 1% which is being mentioned as what I believe. The single percentage, the long-term investment percentage, good for everyone. But when we talk about trading, it's a whole different world where higher returns would come into discussions, and that is okay, and that can be doable. And now let me clarify, I'll end this, conclude this with this, which is long-term investment, super easy, everyone should do this. Trading again is easy. It's just that This is probably an elitist world where we have kind of made things to look very difficult, but it isn't so, right? We all know it. I mean, whoever is every trader here knows it, right? It could be done, it could be learned. It's not a skill that you're born with, right? It's something which is absolutely learnable. I mean, people learn amazing skills. I look at artists and I'm like, how are they even doing it? And trading is not even comparable, is what I think. Again, quoting Boniju sir, it's just common sense that you need. I mean, you don't need out of the world strategies. It's just a sane mind, a disciplined mind, and trading could be done by anybody. And again, re-establishing the fact that there isn't education around trading in the country. There's still social stigma around trading, right? Who can go around to the society and say that, hey, I'm a trader. I live of trading, and they're looking at you and they pity at you, right? I mean, didn't you get anything else to do? And is that why you're trading? That is the world that we're living today. And in that world, it might seem that trading is difficult when it is not. So that's the point I really wanted to put across. Which is with the right education, with the right mindset, when you are being disciplined, with the right mentors probably around you, you can get into it, and generating an income from it is absolutely possible. And that's something which I personally, on my personal capacity, try to propagate a lot, right? So that's something I really want to put across. So thank you for that, and super honored to be in front of LIC. So which again has personified the fact that I mean the largest fund manager in the country, right? Probably one of the largest fund managers in the country or the world, which for a fact has shown us that you put money into the market and you sit on it, right? I mean, how beautifully they're managing a sum that we cannot even comprehend about. And they're making absolutely high returns with it. They are not doing any ninja action stuff there, right? They're just being super conservative and having a very disciplined, sane head, right? So that's the kind of mentality that retail traders and investors should need. And I would conclude by saying that. So looking forward to the rest of the session. Thank you very much.
Today, when I stand here, it's very difficult to comprehend the change in outlook that has happened in India, primarily with crypto over the last 2 years. When I started off 2 years back or 3 years back, crypto was there was a crypto window, that it was a bear market. Every time you speak about crypto to someone, it's perceived as a way to get rich quick, a way to, at the end of the day, scam the government. But to stand here in one of the finest summits talking with veterans in the finance space, it clearly shows the difference in which the market is being perceived at this moment. I've been on the wrong side of capitalism when I started off, and crawling to the other side, I realized how difficult or how different access to banking, capital, all of that is as a person across the different spectrums. So, as an engineer, when I got a chance to look at revolutionizing the way we always perceived banking, it blew my mind away, because now, as an engineer, I stood a chance to look at banking and say, hey, there's possibility that we can change this for good for later. I know I'm speaking to a room full of people who might not have exposure to crypto yet. With that in mind, I just wanted to touch upon three simple topics and then open up for questions later. The three topics being the different types of crypto, where is its value coming from? So very clearly mentioned about the tremendous upside in the crypto space that the space saw over the last few years. So where is that value coming from? And third, the regulatory landscape that's changing across the world in respect to crypto. To start with, crypto it's very, I think Sharik did a very good video about exploring crypto to a wider audience, but not going that far and just picking up maybe four different types of cryptocurrencies and talking about it. There is Bitcoin, that's clearly mentioned, takes up to 42% market cap in the space, clearly looked at by people as a store of money, widely adopted, the first cryptocurrency ever made. And because it is also a scarce resource, it has value and always perceived as a store of wealth. On the other side, there are tokens like Ethereum, which is also a token and the underlying blockchain, where the value of Ethereum is derived from the applications of the blockchain in itself. Um, Ethereum, on top of the Ethereum blockchain, there are other cryptocurrencies being built. There are applications that replaces or enhances insurance or lending has been built by removing trust out of the system. You don't have to trust organization A or organization B to take care of your insurance. It's taking that away from uh, the trust out of the equation. And third are tokens like stable currencies, where stable currencies are pegged against an underlying asset. It could be pegged against USDT. So USD, let's say $1 equivalent to one stable coin, which essentially makes it very much of a stable asset, which I don't think anyone really speaks about. And I keep bringing this up every time I talk to someone. That's one of the best inventions post crypto in crypto, because it's bringing the world that we are familiar with, the physical world, closer to the digital world. And the fourth, obviously, I think a lot of people who comes into crypto talks about Dogecoin, Shiba Inu, all the meme coins out there. And as the name itself clearly shows, it's meme coin or joke coin, and it's not really derive value from anything. So I wanted to talk about this or give that perspective just to show how wide the applications of crypto is and how wide different currencies are being built to solve for different use cases. So, where is the value coming from? The value is coming from the fact that we're looking at crypto to not replace banking in any way. I don't personally, though this has been thrown around a lot by a lot of people saying that crypto is going to replace banking or monetary policies. I don't believe in any of that. The fact is, it is giving us a way to look at money for the digital age. It is giving you programmable money. It is helping you look at money and that can exist outside the control of the traditional infrastructure out there. What does that entail? What en- what that entails is the fact that you are removing, as I mentioned in the beginning, trust out of the system. Imagine you want to have an insurance fund or lend to someone, and you don't have to trust the other person to give you your money back. Imagine a code does that for you. The fact that we can look at money and fine tune it for the that we are in is what derives value to the asset out there. So yeah, Bitcoin significantly rose over time. There is value to Bitcoin, but the underlying fact is it is giving it as a perception or into what money could be over the long term. And the last thing that I wanted to talk about was the moving regulatory landscape across the world. Uh, Again, like Sar rightly pointed out, the government introduced a 30% slab on cryptocurrency gains. There's a 1% TDS in India. Is crypto tax, but is it legal? Is there regulatory structure? Is it still used for fraud? At the end of the day, any currency, any technology, unless and until you regulate it properly, has scope for misuse, which is evident. The fact that an open monetary or a way to transact money exists without government actually putting restrictions on top of it. Imagine banking without AML checks, KYC checks, travel rule, any of that. All of a sudden, you're bringing in, obviously, it'll attract bad actors into it. But if you look at how good regulated or good countries that have forward looking regulations looked at banking or crypto, you can see that every country, including Singapore, US, EU, have proper regulatory structures surrounding how you should regulate the space, how the companies that exist in the space should exist, and how do you onboard someone to the crypto space in general. Imagine we as a platform, for example, every person, when anyone comes into the space, we do their KYC check, their AML checks, we run it through every government database out there, watch list, we look at transaction monitoring on chain to look at if there is ever getting touching a tainted wallet, etc. So the fact is, at the end of the day, unless and until you regulate it properly, the space is always going to have bad actors coming into it and misusing it. But if you look at what's happening across the world, US banks can now be licensed, authorized custodian for crypto. Banks started helping people, their customers, trade with crypto. So banks, governments, regulators started regulating it well, and which I believe is a very positive step towards where we are heading to and how the space can evolve over the long term. And which is exactly where the value of crypto is coming from. It is showing us what this money could be for the digital age that we are heading to. Uh, and there's a lot more to talk about in terms of regulations, of changing landscape in India. In fact, the number that Sir told, which is 10 lakh users, 10 crore users in crypto, it's actually significantly increased from there. So the space is evolving, and what we need to do as investors is to actually spend time researching about what the underlying technology is. A lot of people come into crypto, start learning about crypto without learning about crypto, heard someone say Shiba Inu or a meme coin and started investing. All of a sudden it tanked, and like everybody lost their funds and they start blaming crypto. But at the end of the day, what we really have to do as an investor, as a trader, is to look at what gives it intrinsic value. What is it all about? Understand the space so that you know what you're getting into and who you are in bed with. So yeah, with that, I think we have a Q&A at the end, which I'd be happy to take any questions post that. But yeah, thanks a lot for inviting me. It's a pleasure to be here, especially with esteemed guests like all of you here. Yeah, thank you.
And now we'll request three questions from the floor because we have time limits are there. So kindly limit it to three. Any of you can kindly raise your hands. Put up the question.
There are no questions. Let me ask. Anybody else? My name is Maxi Jules. I am from Fluence Financial Services. There's a question for Mr. Kurian. You talk about the cryptocurrency. The two questions I have. You talked about intrinsic value and you talked about score of wealth. I doubt if you can really find the intrinsic value as well as it become a store of value. At this stage of for an investor to actually look at it today is extremely, extremely difficult.
Yeah, for sure. So I was talking about two different currencies at that moment. Bitcoin being the first cryptocurrency that has such a wide adoption and have been, and because of the artificial scarcity built into it, creates that fundamental outlook on it as a store of value. But intrinsic value, I was talking about currencies like Ethereum, which had more value to that what it than just be a volatile store of wealth asset. Because, like I mentioned, Ethereum, the underlying blockchain helps you build financial services, or we talk about metaverse these days, we talk about NFTs these days. All of those are built on blockchains, which which is at the end of the day can exist only with the fact that there's a currency like Ethereum on top of it, which is used to pay for the entire ecosystem. So the value of Ethereum comes from the fact that it is creating the public blockchain, which can be used for all of this and any sort of development that would happen in the space over the long term.
I'd like to make it more clear actually. So when we speak about intrinsic value, the largest question is what is the intrinsic value of Bitcoin? So Bitcoin is more like gold in the world of cryptocurrency. So what is the intrinsic value of gold? It's just a perceived value that we have attached to it, right? So it's very similar when it comes to Bitcoin. The value, intrinsic value of Bitcoin is something very similar to the intrinsic value of gold. Now let's talk about other types of cryptocurrencies. So this such questions arise when we have very less knowledge about the whole domain, right? So there are different types of cryptocurrencies. So when we speak about a lot of cryptocurrencies these days, even when we speak about NFTs or a cryptocurrency for that matter, there are cryptocurrencies which represent a company itself. A company raises funds by issuing those coins. So what is the intrinsic value of the currency there, cryptocurrency? Is the company itself, right? I mean, the company is growing, it has its own business, it has a lot of plans going ahead. So a lot of cryptocurrencies these days are very similar to the shares of a company being issued, right? So in those terms, actually, we can actually find intrinsic value to cryptocurrency.
I have one question. That is basically when there is a TDS of 1% for every transaction, whatever we do, and mining costs, etc., can be deducted from the income for the 30% tax. Put together, will it make it a viable thing for a trader in crypto as of now? With the new rules coming up from 1st of April.
I'll take it quickly, but I'll pass it on to Sanju for a larger answer. But I would say 30% on profits, right? I mean, a good trader, if he's trading in his personal account, if he's trading derivatives, he's paying 40% at the end of the year, 42 point something at the end of the year. So if you're making profit, then what is the problem in paying? Yeah, that's also there. So that's where probably he could come in with, since he runs a business on that domain. Otherwise, I feel taxation is just a good step in progress in this domain, and paying tax, I don't think is the last issue as of now.
For sure. The problem comes when you have the 1% TDS. Because you are essentially a capital trade as a trader is reducing over an interval. So yeah, every time because your capital that you can actually deploy to trade is reducing after every trade that you're doing, so which is very bad. But yeah, it's a step in the right direction, taxing it, but this is very harsh.
Any more questions? Yeah, one more question we can have.
Do we have any question? Anyone at all? Yes, there's one hand raised there. Can we have microphone passed on to him quickly? Thank you.
I have two questions. The first one is to Mr. Prince, sir. Sir, now there is a commodity bull run is happening in the market. Likewise, I have put my excess money into the commodity stocks like Vedanta, Hindalco, all the stocks I put my excess money. And now there is a commodity bull run in the market. And normally I have taken the data of last 50 years. Last 50 years, when there is a commodity bull run, it will not last for 1.5 years, more than 1.5 years to 2 years. It will last for 2 years. So, do you feel that this commodity bull run will soon end and other stocks will go on? Because commodity bull run is a very, it will affect our market like anything. Like it will increase the food price, it will increase the cost of building materials. Everything will happen in the market and it is actually a wealth destroyer. So the developing and developed countries will do anything to block this commodity bull run or.
First of all, thank you for the question. Like I seriously doubt whether governments or developing countries or somebody can do something on this commodity prices. Basically, It's demand and supply on the one side, and the very fact that there is a lot of stimulus in the economy in the last few years, with a lot of liquidity around the corner and inflation rates going up, naturally the commodity prices are also going up. Now, coming back to the important point which you have highlighted, commodities normally have a slightly longer cycles. Like I don't know, I am not qualified to answer whether it is 1.5 years or 2 years. It has to mature by itself. That's all what I can tell you. The current scenario is such that, like if you look at individual commodities, many of them have got constraints on the supply side, where certain countries which are major producers have not expanded their capacity in the last few years. That is one reason. And suddenly, with demand coming back after COVID lockdowns, I believe that the commodities are going to be buoyant for some more time. That's all what I can tell you. Maybe 1 year, 2 year. I really don't know. Now, as well as investments in commodity stocks is concerned, like it's a different ballgame. Let me tell you, uh, the very fact that the underlying commodity prices are going up doesn't mean that the companies which are in that space is going to make money or not. It is because the companies will have certain other factors to deal with. For example, a steel company, even if steel prices are going up, their cost of production may be going up even much bigger than that, because some of the components like coal and other things which are required for manufacturing steel is, I'm telling you one example, steel is also going up. So the answer to investing in commodity stocks, my suggestion is that even though there is a link between the commodity prices and the commodity stocks, we have often seen in the market that, like much before the commodity prices itself correcting, we have seen the prices of commodity stocks correcting. This is one thing which I have noticed in the past. So commodity stocks have to be followed up based on their fundamentals, not based on the commodity prices alone. The commodity prices is a leading indicator. I agree with that. I hope I answered your question.
Sir, I think
Yeah.
we have to
Yes.
the next program has to start. Yeah.
Yes, we can take the next question off stage. And with that, thank you, sir. And with that, I'd like to request our chair to present a memento each to our panelists here. I request all gentlemen to please take the center stage, and Mr. Abraham Therian will now present a token of our appreciation to all three of them, starting with Mr. Prince George, MD and CEO of DBFS Securities. We could use some good music here. Thank you. And I'm proud to have you, Mr. Prince George. And next, Mr. Sharik Samsudeen, founder and CEO of Market Feed. Great views expressed here on stage. And finally, Mr. Sanju Soni Kurian, co-founder and CTO of World. And to present a memento to our respected chair, I'd like to have on stage Mr. Deepak Aswani, chair of FICCI, Kerala. He will be presenting a memento to the panel chair, Mr. Abraham Therian. Let's please hear it louder for them. And I request all of you to take the center stage for a picture together. All of you together, yes. Thank you, gentlemen, for that fascinating session on stage. So many different views, sometimes clashing views expressed here, and that's what leads to knowledge generation. Thank you. And with that, we quickly move on to our keynote address. And it's a privilege for Dhanam to host this brilliant author and investor, who's the founder and chief investment officer of Marcellus Investment Managers. He was educated in the London School of Economics. And in London, he was the co-founder of Clear Capital. In 2007, he was rated by Extel Survey as one of the top small cap analysts in the UK. And coming back here, as the leading equity strategist in India, he was selected as the leading equity strategist in India in 2015, 16, and 17 consecutively by the Asia Money polls. Prior to setting up Marcellus, he was the CEO of Ambit Capital. Very proud to present to you Saurabh Mukherjee.
Thank you very much. Thank you, Dhanam, for inviting me. It's an absolute privilege being here. So I have to make a bit of a confession. So I migrated to India 14 years ago, and I've been coming to Kerala ever since. Every time I have flown out of Kochi, I've seen Gurinju's portrait up there at the airport. And it's an absolute privilege to be able to share a stage with this giant from Kerala. So thank you, Dhanam, for making a dream possible. We have a lot of respect for senior investors like Gurinju, also privileged to be in front of senior people from LIC today. That being said, when the email from Dhanam showed up in my inbox around 5 weeks ago, right? I was actually a little apprehensive because one of the best indicators that things are going to go south is if you get conferences happening in five-star hotels. But then I Googled things and I figured out that the venue is not a five-star hotel. We should all be so happy the venue is not a five-star hotel. If you ever happen to be attending a conference in a five-star hotel, you know things are going to go south thereafter, right? From what I understand, this is a very good four-star hotel. And one of the things all investors out there, make sure that when you invest, the fund manager's expense ratios are low. And when you invest, when you attend forums like this, if it's at a five-star hotel, somehow or the other, you're only going to pay for it. So it's a big privilege to be here, especially given that this is not a five-star hotel. Conferences and five-star hotel for investors are never a good idea. But let's get into what we do for investing. I think there's a bunch of slides. Any idea if anybody's projecting the slides? Does anybody know? You're going to project it from there? If you, if I could get the slide together, nothing like it. So I'll give you a little bit of background on us, why we came to India, because our journey in India has in it, to be honest, the bulk of our message to the 1 lakh people who read Dhanam's magazine and the people who are going to show compound their wealth by reading Dhanam's magazine. There's three of us, we've been working together for 19 years. We used to do exactly this, what we do in India, we used to do for British investors in the London stock market. I created that company in the early part of 2004. 2007 January, we did a little bit of analysis on British banks and we realized that the British banking system is going to blow up. So the entirety of 07 was spent getting investors out of their holdings in the UK. Early 08, we realized not just the UK, the United States is going to blow up. So we sold that company. May 2008, we migrated to India. May 2008. Just jump forward 2 slides if you can. Jump forward 2 slides. Just go forward another. Yeah, this one. May 2008, we came to India. Now, why did we migrate to India? My son was 6 months old, then I was 31. Why did we sell everything we have in the UK and move to India at the prime of our careers? There's 3 things that brought us back here. And I would submit to you, all 3 of them are in your favor and will help you compound your wealth at a solid rate over the next 10, 20 years. This has got nothing to do with any government or any political party or the Ukraine war or the latest election. Right? Those are incidental events. I mean, significant, but incidental events. There are 3 things that happen to countries at this stage of development. Our call 14 years ago was this would broadly happen in India, and so far, our reckoning is it's by and large going to plan. The first thing that happens to a country at this stage of development, typically a free market economy, right, as it comes together, as it gets integrated, right, this is what happened in Japan after the Second World War, or say America between 1880 and 1930. When you join up a free market economy, you consolidate the economy. Every industry rolls up into the hands of 1 or 2 companies. And if you or I are able to spot those 1 or 2 companies who are consolidating that industry, you ride with that consolidator and make a lot of money. So I'll give you a couple of examples elsewhere, and then we'll do an Indian example. Every single American brand you would be aware of, excluding the technology brands, every single American brand, right? Whether it's Heinz, Kellogg's, Pillsbury's, General Motors, Ford, Coca-Cola, every single American brand you and I would be aware of was created between 1880 to 1930. What's unique? Why were those American brands created in that 50-year period? Let me just grab a bottle of water. Don't mind. Why is it that the American brands you and I are aware, why were they created in that 50-year period? So 1880 is when the Americans got their railway network sorted out. 1900 is when the telegraph came to America. 1910, 1910 was when the world's first mass-produced motor car, the Model T Ford, was launched. By 1920, the road network, the first road network, was built in America. And as you joined up America, as you networked America, a national giants emerged. For example, let's take a very simple example. All of us would be aware of Heinz. So it's not as if in 1870 Americans weren't having ketchup. They were having ketchup, but the ketchup manufacturer was a regional player, much like the achar manufacturer, right? Today in India, the condiment manufacturer is a regional player. The ketchup manufacturer was a regional player. The most efficient ketchup manufacturer was Heinz. What do we mean by most efficient? The company that generates the greatest amount of free cash flow. I'll define free cash flow subsequently. The most important concept in investing is not PE multiple, it's actually free cash flow. The most efficient ketchup manufacturer was Heinz. Heinz either acquired regional ketchup manufacturers or bankrupted them. And today, therefore, they dominate, they have consolidated the ketchup industry. The same thing is happening in India times 100. In industry after industry, one or two companies are consolidating the industry, and all you and I have to do is ride the consolidation. Why is India going through a similar period in its development? So I've got some stats on the top, but maybe it's a little too small to see at the back, so I'll read it out. In the last 10 years, the highway network has doubled in India. So if you want to see the power of this, go to Hosur at 4 a.m. in the morning and see the trucks leaving Hosur at 4 a.m. By 10 a.m., the container gets loaded at Vizag. This wasn't happening 10 years ago. Because of the road network improving, trucks go faster, that reduces working capital for companies. In the last decade or so, the number of bank accounts have trebled in India. Broadband connectivity is up 40x, and flight connectivity, the number of people taking domestic flights is up 5x in spite of COVID. On top of that, GST has come in and created an obvious unification of the indirect tax network. What does that do? That consolidates industry super fast. So just to use a relevant name, which is on the board over here, when I was growing up in Delhi in the 80s, the my school friends used to be the local money lenders. They were jewelers in Karol Bagh. Karol Bagh is a part of Delhi. My school friends were local money lenders in Delhi. They no longer do gold finance. Who does gold finance? The companies from your state, right? They do gold finance near my office in Bombay, near my school in Delhi, and Kerala-based companies now dominate the national gold finance market. Similarly, when I used to go to Kolkata for my summer holidays in the 80s, we used to have Rollek ice cream. In Bombay, we used to have Vadilal ice cream. Regional ice cream brands are gone. One ice cream company, one national ice cream brand dominates the ice cream market. It's an MNC ice cream brand. Everybody has it, so I won't get into the specifics of it, right? So whether it is undergarments, whether it is biscuits, whether it is paint, whether it is cooking oil, whether it is hair oil, India is consolidating super fast. And in the next 10 years, you will see this accelerate further as these little things in our hand get more powerful, as the highway networks get better, as financial penetration goes deeper, courtesy the people sponsoring today's events. This is the first driver, right? Massive driver, right? And all these drivers I'm going to tell you, you and I don't have to do anything. We just relax on the beach in Kerala. The external forces will compound our wealth, provided we invest sensibly. First driver, consolidation of a country. Second driver, low cost, world-class technology. Not Indian technology, but by God, hugely helpful for India. So back in 08, those of you a little, little older, my age, you'll remember, back in 08, we used to use Windows software where you would buy a dabba, a box, and you would take a CD-ROM out and stick it into and boot up your machine. Right? Now, many people in India didn't do that. They had pirated versions of software, right? But whether it was pirated or official, it was a massive boost for India. The fact that Indians could get low-cost software was a massive productivity booster. 12 years on, right? The combination of cloud, mobile, and SaaS has made it very easy for smaller Indian companies to grow very fast at very low cost. So I'll give you a straightforward example. The company that makes the largest amount of footwear in India. Right? Anybody wants to guess the company that makes the most units of footwear in India by far? Relaxo. 200 million units of footwear. They are 5x larger in terms of unit production. What is the secret of their success? The secret of their success is not some mind-blowing recipe for great footwear. The secret of their success is hiring Accenture in the year 2007 to install SAP. By installing SAP between 07 to 17, Accenture cut down Relaxo's receivable days from 90 days. They were taking 90 days to collect money. By and large, most of the footwear companies still take 90 days to collect money. By 2017, Relaxo's revenues were being collected in 30 days. Right? The fastest cycle time in collecting revenues in the footwear industry. Now, in any business, whether it's in a hotel or in a chappal company, if you collect money quicker, you have more money, you know? If you collect money quicker, you have more money. And what did Ramesh Dua Saab of Relaxo do with that money? He set up factories. Right? The management consultant told him, boss, everybody outsources footwear manufacturing. Nobody, even Nike outsources. Ramesh Dua said, no, I'm going to make footwear. Between 2008 to today, they've set up 8 footwear factories in a place called Bahadurgarh outside Delhi. Their scale of production is 5x larger. As a result, the raw material which goes into making this is basically plastic raw material which goes into making their footwear. They buy that raw material at half the cost of any other footwear manufacturer in the country. Now, why is that such a big deal? Your working capital cycle is quicker. Your raw material cost is half. What can you then do? You can sell footwear at 100, 120 rupees at a gross profit margin of 60%, at an operating margin of 17%, at a return on capital employed of 30, 35%. By the way, Bata has similar figures, but Bata's unit costs are 7x higher. And why is this? Why is that 100 rupee price point magical? In India, we make 500 million units of footwear in the official sector, the white sector. Relaxo accounts for 40% of that. In the black economy, anybody wants to guess how many units of footwear we make in the black economy in India? 500 million is the white economy figure. Black economy, how many units of footwear would we be making? Anybody wants to take a guess? So roughly 2.5 billion is the number we have. Black economy makes 2.5 billion. White economy makes half a billion. Now, the black economy footwear, the sorts of footwear, say the lady who cooks for me used to wear, she now wears Relaxo, not because I told her. There's free market forces at work. The lady who cooks for me, she used to wear black economy footwear. Black economy footwear costs 70, 80 rupees in Bombay. Maybe it's a little cheaper elsewhere. 70, 80 rupees. So as the black economy dies little by little because of COVID, because of Neiman, because of GST, as the black economy dies, say 10% a year, right? These customers who are going to migrate, will they buy a 500 rupee chappal? Will they go from 70 rupees to 500 rupees? Or will they go from 70 rupees to 100 rupees? I think the latter is more likely. And Ramesh Dua Saab is waiting for them with his 8 factories. Every other year he adds a factory. No other formal white economy footwear manufacturer can mass produce at that price point, at that level of profitability. The core of that is the use of SAP to crush working capital, to generate superior cash flow, drive massive scale expansion without taking debt. There's no debt here. You just scale and scale and scale again, right? And there'll be some, if we had time, I'll take you through many similar examples where low-cost, world-class software is helping small Indian companies scale much faster than has ever been possible in our country. And you can see how these two effects interplay. The country is joined up, and the technology is low cost, world class. These two things knit into each other. Had the country joined up but the technology not been there, we wouldn't have seen this phenomenon. Had the technology been there but the country stayed fragmented, it wouldn't be so powerful. These two things come together. And there is a third driver as well. And I dare say the third driver is the most powerful driver. I suspect without the third driver, many of us wouldn't be sitting in this room. The third driver of what's happening in our country today is the fact that India's tax to GDP ratio is a pathetic, I think is the only word for it. India's tax to GDP ratio is a pathetic 10%. No country in the history of the planet has developed at 10% tax to GDP ratio. The Western countries typically are at 40% tax to GDP ratio. Right? Now the country needs to collect more tax. Who will they collect tax from? The mega industrialists of Mumbai, or will they collect tax from the small businessman? The small SME owner is the most likely constituency who will get squeezed to pay more tax. He or she will get squeezed via GST. He or she will get squeezed via tax changes. But the SME constituency will not be able to evade taxes. Indeed, post post GST, post the advent of GST, the SME constituencies squeeze is very ample. Now, as the SME gets squeezed to pay tax, who benefits? As the tax evading SME gets squeezed, the market leader who's not evading tax benefits, right? In one fell swoop, the government basically kills the competition and hands over the sector to the organized sector leader. If you want to see this at work, go to the local jeweler near this hotel. Right? I don't know the name of the jeweler, but I guarantee you the local jeweler's life is being squeezed out of him by the squeezing of the black economy. Right? One jeweler has benefited. One jeweler who doesn't do black has benefited. India's fastest growing jeweler in the last 20 years, the listed jeweler called Titan. 100x growth in free cash flows and share price compounding. Even though Titan sells, Titan's making charges are a 20 to 40% premium to the local jeweler. Premium product, unrelenting compounding at 30%. Market share, Titan, I would say 7%. One of the world's largest jewelry markets. Sea of growth, runway of growth. The local jeweler, whether in Mumbai or Delhi, Kolkata, Kochi, will keep getting throttled. And you will see in every region of the country, one, maybe two chains emerge who will consolidate the jewelry industry. Titan's already created billions of dollars of wealth. If you never see me again, you know which stock to go and invest in, right? So this driver of wealth is the squeezing of the black economy. Now, the squeezing of the black economy has another massive ramification for not just the guests here, but the 1 lakh people who read Dhanam's publication. As per the Reserve Bank of India, 95% of India's wealth, 95% of India's household wealth is in physical assets, which is real estate and jewelry. Right? The RBI has said, if you want to just read the 2017 Household Finance Committee survey, the RBI has said no other country in the history of this planet has had a skew like this. 95 physical, a mere 5%, of household assets are in financial assets. Now, how much is India's household wealth? So Thomas Piketty's work suggests that countries' household wealth is typically 3 to 3.5 times national income. Our national income is approaching $3 trillion. Household wealth, all of India's household wealth added up, is roughly $10 trillion. 9.5 trillion is physical. A mere $0.5 trillion is financial assets. And if you look at the data on SEBI's website, IRDA's website, RBI's website, this is tilting. Households are going from physical to financial. Why are they going from physical to financial? Because if you retire at the age of 60, most Indians, you're in my strata, live till 85. For a middle class Indian retirement, by middle class I mean swift desire, holidays to Kodaikanal, right? Nothing more ambitious. For a middle class Indian retirement, you need to retire with 15 crores of financial assets in your bank. I don't know about you, not many of my relatives are headed for a 15 crore corpus at the point of retirement. So, what you are seeing is an en masse movement by the readers of Dhanam who have figured out, they might or might not have read my books, but they have figured out that this is not looking good. A flat in Kochi or Bombay or Gurgaon in Delhi is not going to finance my retirement. I better have 15 crores of financial assets. And thus, if you look at the data on regulators' websites, Indian households are shifting roughly at the rate of $100 billion a year. So every year, roughly 100 billion is going from physical to financial. Over 10 years, therefore, we are heading for switching $1 trillion from physical to financial. Now, if you keep pumping money into the financial economy, what happens? Will the cost of capital fall or the cost of capital go up? Capital will fall, right? If you keep pumping money into the financial system, the cost of capital will fall, and it's fallen big time. So 2004, the 10-year Government of India bond yield was 17%. Today it is 7%. By the time my career is done, I think it will be 3%. As you bring down the cost of capital, who benefits more? The tax evading jeweler in my suburb of Bombay or Titan? Titan benefits more, no? The Bajaj Finance benefits more than the local money lender in, say, this part of Kochi. As you bring down the cost of capital, the well-organized market-leading company benefits disproportionately. So these three forces are mega trends, right? You and I don't have to wake up in the morning and worry about them because these three forces will roar away for the next 10 years. The joining up of India, low-cost, world-class technology, and the formalization of savings and the concomitant drop in the cost of capital. And what that is doing is shown in the chart. We are concentrating the country's profitability into the hands of a handful of companies. As I said, most industries that I'm seeing, one or two companies are scooping up the entire industry's profits pretty much. At the national level, therefore, roughly 20 giant companies are taking home roughly 80% of the nation's profit. Right? And if you look at this chart, that's been a steady process, right? So 1994, when we opened up India, when the country was liberalized, the top 20 companies made up barely 15% of the nation's profits. Before COVID, it was roughly 60. Latest accounts suggest around 80%. And these are giant compounding machines. Full disclaimer, what I'm going to tell you about are companies that we have invested the best part of $1.5 billion in. Since I also invest in Marcellus' products, these companies are companies I own through Marcellus, and so do my parents, right? So full disclaimer, these companies are companies I have a vested interest in talking about. So these companies, TCS and HDFC Bank and Kotak Bank, if you look at their numbers, you'll see that they're growing consistently at around 20%. However, if you go to the Ministry of Corporate Affairs website and you look at overall corporate profitability in India, it doesn't even grow at half that rate. Market-leading giants are growing profitability consistently at 20%, but the overall country is not growing profitability at half that rate, which is why the profit share of the giants is shooting up. And therefore, what we are doing in India, what we write about in our books, is how can millions of ordinary families benefit from this structural change in the country. The Indian economy today, I stress, today is completely different from what it was a decade ago, right? And this is how America developed, this is how Japan developed, this is how Korea developed. Korea and Japan are even more consolidated in India. Korea, as many of you know, is basically 5 companies. They run the country. Japan is a little bit more, it's 15. America, at a corresponding stage of development, was also 20 companies, which is around 1930. America was also 20 companies. This is how development happens. The smaller companies, the weaker companies die. The economy consolidates. For you and me to make money, we ride the consolidation. So how does it practically work? How can you benefit from this? Let me see if I can move forward. Can somebody toggle it forward? Yeah, I think I've toggled it. Yeah. So let's start here. Thank you. So we'll start here. So this is a summary. We do 3 things, which I explained. If you want to read more about this, I'll take only 10 minutes because time is of the essence. But if you want to read more about this, read Diamonds in the Dust, our latest book. You can buy it easily on Amazon. Unfortunately, pirated copies are being sold at every footpath. So whichever form, read the book, right? Whether you read pirated or original at many levels, I'm not so fast. In Diamonds in the Dust, we have explained this in more detail. In the interests of time, I will give you a succinct summary. Step 1 is we use forensic accounting to identify listed entities who are not stealing your money. Accounting issues are still rife in the Indian stock market, and our first job, therefore, is to clean out roughly half the stock market using forensic accounting. I'll give you a little bit more color in a minute. Step 2, amongst the clean companies, we need to find competent companies. If a company is clean but incompetent, that's no good, because an incompetent promoter will destroy your wealth. So step 2 is looking for companies who are not just clean, but are delivering a return on capital well above the cost of capital, above 15% typically. Step 3, amongst the companies who are clean and competent, we only invest in monopolists, right? We only invest in companies who sell their products at a 20 to 40% price premium without ever having to worry what price point the competition is selling at, right? I gave you one example in Titan. If time permits, we'll do a couple of more examples, right? So that's the 3-step process. Step 1, clean accounting. Step 2, sensible ROC, which means sensible return on capital, sensible capital allocation. And step 3, monopoly company. We do not invest in companies with discount prices and try to get business. You and I can never make money investing in companies which deliver stuff to you or give you tickets or free food and free airline tickets and so on and so forth, right? So let's just do a little bit of color and detail on that. Let's do the first bit, right? So the fraud bit, the way we do it is there's 15 forensic accountants. So as I said, we came in 08. We spent a couple of years meeting the biggest crooks in the land. We discussed with them our thoughts on how they were stealing money. Some of them were a little nasty. The nasty ones are in jail today. Most of them were very cooperative. We shared a couple of ways for them to steal money. They shared 3 more ways that they were stealing money. They were quite proud about it. Right? And thus, through the help of the biggest crooks in the land, we created 12 forensic tests. Right? This is very similar to a health checkup. When you go for a health checkup, they measure, say, your blood pressure, they look at your triglycerides, they look at your white blood cells, and there's a reference range, right? So the doctor knows that a normal human being is in this range. If Saurabh is outside the range, that test is put in bold, and then Saurabh's wife shouts at him, right? That's typically how it works in our house, right? Now, we do the same thing, but in forensic accounting. So, for example, one of our tests, if you look at the table up there, the table on the top right, one of our simplest and this is one of the most entertaining tests is growth in audit fees relative to growth in revenues. So several large companies in India, their audit fees grow faster than revenues. And I don't think you need to be a forensic accountant to figure out what exactly the auditor is doing there. This is how we've spotted some of our most memorable frauds. If you read Diamonds in the Dust, we've given 7 case studies of fraud discovery, real promoters, real theft, real money stolen. We've explained in the book how it's been done. It was actually remarkable. And I remember doing, one of the privileges of living here is you can have these conversations real time. Another example, right? Ratio number 1 on that table. This is the, what should I say? This is the mainstay of forensic accounting. The first ratio is called the cash conversion ratio. So cash conversion refers to for every 100 rupees of operating profit, for every 100 rupees of operating profit, how much cash flow does a promoter generate? Right? Now, people like Parunjit and I, because we've been doing this for a long time, we will know what the working capital cycle of that guy's sector is. If you know the working capital cycle, you'll broadly be able to figure out if, for example, in the pharma industry, a decent pharma company converts 100 rupees of profit and roughly into 80-85 rupees of cash flow. There is one naughty boy in South India who doesn't do that. Big pharma company in South India who doesn't convert at 85. He converts at 65. Why does he convert at 65? Because he takes cash from the listed entity and he finances his private real estate business using cash. This is a common stratagem in India, right? This is not blown up yet. The companies that have blown up, we mentioned in Diamonds in the Dust. Companies that haven't blown up, we don't invest in them. But this is a disaster waiting to happen. It will blow up once there is a regime change, once there is a political change in that city, or the real estate market in that South Indian city collapses. This promoter is going to come on CNBC and do what Ramalinga Raju did. And then everybody will say, well, boss, how are we supposed to know? He never told us. That's because many people in our country don't read the annual report. If you read the annual report, you can see he's taking out money from the listed pharma business to finance his private real estate business. First step, therefore, is to use a bunch of simple tests, some of them given up there, all of them given in the book, to weed out half the stock market. 1 and 2 companies pushed out of the picture because of not living. Second step, as I was saying, is to say a company is clean, but hey, clean has to be allied to competence. How do we know that a company is competent? So suppose for some reason the owner of this hotel were to ask me to consider buying a stake in the hotel. The first thing I would check is what is the return on capital employed on this property. I know COVID has been harsh on hotels, but let's assume we meet a year hence and the hotel market booms in Kerala. Right? The only circumstance I would be willing to have a discussion with the owner of this lovely property is if the return on capital, pre-tax return on capital is at least 15%. Because pre-tax return of 15% means post-tax return on capital of 12-13%. If it's below that, there's no point in engaging. So what we look for in the listed market is the same thing. Unless the company can show, the promoter can show that over the past 15 years, the past 10 years, he's been able to generate a return on capital of at least 15%. I'm not interested. So there's a gentleman at the back, because of lights I can't see him anymore. He's very bravely investing in metals and mining stocks. Most of the metals and mining promoters aren't able to generate a return on capital of 15%. I would say 8 out of 10 years. And therefore, it becomes a very tricky affair for people like us to take money from thousands of families like yours and put it in stocks where the promoter hasn't shown any track record actually of generating a return on capital above the cost of capital. Once you do these first 2 tests in India, you're left with around 40 companies. And that's when the monopoly work begins. 40 companies, remember the homework exercise? The homework exercise is now to find companies who are able to charge a premium of 20 to 40% without the competition being able to do anything about the company. Right? Now, it looks a little complicated. Let me give you an example just to simplify how this works. Right? So let's think of a company whose products I'm pretty sure 99% of people in this room have consumed. Let's think of Nestle. Right? Simple company. I'm pretty sure everybody's either had their baby milk or their chocolates or their coffee, and would be a rare Indian who's living a non-Nestle life. Now, Nestle, if you read the annual report, their return on capital is astonishing, 70%. Right? Nestle's main product, anybody wants to volunteer? Nestle's main product, where they make most of their cash is Maggi is the second biggest product. Main product, which a baby milk powder, absolutely. Right? 0 to 2 in India, 0 to 2 age is called infant. That's the infant milk powder market. In India, above 2 is called the child care market. 0 to 2 is the infant milk powder market. It's a 15,000 crore market. Nestle has roughly 90% market share. Our math suggests that they are making around 90% return on capital in that market. Now, Nestle, interestingly, has only one competitor in India in baby milk powder. Anybody knows the name of the competitor? Abbott, absolutely. So Abbott's product is called Similac. They have roughly 30% share. Now you can do this in the evening. So we are analysts. This is our lie. If you go to the local chemist, he will tell you that the Abbott product is cheaper. And if you go to the local pediatrician, he might tell you that the Abbott product Similac is actually as good, perhaps a better milk powder than lactogen or NAN. Yet lactogen and NAN is 90% market share. They rule the roost. Again, you can do this. Go to a chemist and just say, I want baby milk powder. And he will always give you lactose. So, whole bunch of things to think about, right? Firstly, dominant player, massive market, 15,000 crore market, dominant player, incredible profitability. Even if you go by the printed ROC, which is 75%, incredibly profitable company. Why does nobody enter the market and compete with the market? Sorry? Don't advertise? Yes, good point. Why don't they advertise? Why can't you advertise baby milk powder? We've got a very smart audience. I'm so glad. Why can't you advertise baby milk powder? The government doesn't allow. So I think people here are already very clued up. So let me go to the crux of the case study. So remember I told you we migrated to India when my son was 6 months old. So I'd already been buying milk for him in the UK. So in the UK you can get baby milk powder at every petrol pump, wherever. You can get it everywhere. And you get typically 3 or 4 brands. You'll get Nestle, you'll get Abbott, you'll get Mead Johnson. Baby milk powder is advertised over there. So when we came to India, we couldn't see any advertising, right? And I didn't think too much of it until we were researching Nestle for investment purposes. That's when I got very intrigued that there is Similac, but the pediatrician doesn't recommend it. The chemist doesn't give it to you. Unless you speak to a friend who's a pediatrician, you'll never know it's a better product. So we asked the folks in Abbott, and they told us go and speak to the authorities in Delhi. So what we learned is this: in the year 1999, India became the only large economy in the world to reclassify infant milk powder from being an FMCG product. It was made a prescription drug. Even today in India, baby milk powder is a prescription drug. And as the audience has said, if a product is a prescription drug, not only can you not advertise, that's true, you can't advertise, but you actually need permission from the authorities to manufacture it. You'll notice in the last 10-15 years, nobody has been given permission. For example, barring these two companies, Abbott and Nestle, nobody else actually is making the product. It's close to impossible to get permission. Even if you can get permission, what will you do if you can't advertise? If you can't spread the word, it doesn't matter how good your product is, what your price point is, we can't advertise, you're done. Thirdly, because it's a dawai, because it's a prescription drug, it can only be sold through a chemist. You can't just sell it at the local kirana store at a discounted price. So the channel is controlled, the licensing is controlled, the advertising is banned, and thus you have an essential product which grows, volume growth is around 10%. Because the baby doesn't know, right? The baby doesn't know who's running Russia, America, India, whether COVID is happening, malaria is happening. The baby is drinking the same amount of milk. Volume growth is very steady, around 10%. The company takes a price hike of around 2%, revenue growth is around 14%. Guys are very good at the bargaining power vis-a-vis suppliers is immense. So profit compounding will be around 15. And as we said at the beginning, as the country gets joined up, technology gets better, working capital cycle has shrunk relentlessly. Cash flow, free cash flow grows at 20%. One thing to remember, folks, if there's one thing I can tell you, never ever look at PAT. If you want to measure a company, if you are investing your money, and I understand from the previous speakers, rightfully several of you are investing hard-earned money, calculate free cash flow. Free cash flow is the real measure of a company's success. PAT isn't. What is free cash flow? Free cash flow is take PAT, subtract from it capital expenditure, and subtract from that the working capital cycle. Because the real class of a company shows up in free cash flow compounding, not in PAT compounding. Nestle's PAT compounding will be around 14, 15. The free cash flow compounding will be north of 20. Free cash flow compounding of 20% means share price compounding of, so share price compounding of around 20, 25%. This is basically how India works. Companies who are clean, sensible capital allocators have monopoly franchises. The return on capital is in the vicinity of 45%. The typical Nifty company's return on capital is not even 11%. Typically dominant franchise in India is 45%. Companies like Facebook, Apple, Microsoft, Google, Walmart, Toyota, 20% is as good as it gets in the rest of the world. Indian promoters don't get out of bed for 20%. Indian monopolists don't get out of bed for 20%. They send their driver to run companies with 20% ROE. Indian monopolists, minimum is 30%, average is 45%. If a company is generating 45% return on capital, the surplus it's throwing off is roughly 30%. How do we know that? The surplus any company, for example, this hotel will throw off is the return on capital from the hotel minus the cost of capital of the hotel. If this hotel's return on capital is say 20% and the cost of capital is 50, the surplus in the hotel is 5%. In Nestle's case, the surplus is massive. 75% ROC company, assume 15% cost of capital, you're getting a clean 60% surplus. They're actually able to dividend out half of that to shareholders like me. And even then, they have 20, 30% extra capital every year to pump back into the business. New factories, new products every year, dominant Indian franchises. Go and look at the annual reports of these companies. Capital employed goes up consistently at 20%. Because the capital employed is going up 20, 20, 20, 20, whether the monsoon is good or bad, COVID, malaria, Putin, Trump, whatever, 20% consistent growth in capital employed. The free cash flows of these companies, the left panel, grows at 25%. Whether it's in the last 20 years, last 10 years, the latest 5 years, the 5 years prior to that, consistent growth in free cash flow at 25%. That means the promoter's wealth, your wealth, my wealth, grows, as you can see on the right hand side, at 25%. And all of this happens in companies that you don't need to trade in and out of. Buy a bunch of this, as I wrote in my book, Coffee Can Investing. Buy a bunch of these, sit tight, let this country's changes make you richer, make you wealthier, with minimum tension and maximum compounding. Right? That's the privilege of living in India today. And thank you, Dhanam, for making this possible for me to come and share my story with you. Thank you. I'll shut up there. If anybody has any questions, we've got 11 minutes. I'll try to answer as many as possible. Anybody wants to ask anything, feel free, fire away. If I have slides to help me, I'll use them. So don't switch the slides off. I might use the slides to answer some of the questions. Am I coming out with what? Sorry, ma'am. Mutual fund. That's for big boys, honestly. It's a big balance sheet. I think SEBI's capital requirement is, I think, 100 crores for newer companies. We do PMS. We're trying to see this, as many of you know, as per SEBI, the minimum for a PMS is 50 lakhs. We're trying to see if there's something else we can do to help people who don't have 50 lakhs to invest with us. But a mutual fund is an expensive affair. I sit on the SEBI Mutual Fund Advisory Committee. I wish I had the capital. We don't at this stage. So we'll think of some other way of trying to see if we can bring our products to the market. But the books are there. The books are 200 rupees. Many people are downloading the pirated copies free of charge. Right? The new generation have these unique way of accessing intellectual property at zero cost. So you can get infinite return on capital. Right? The best investment, infinite ROC. Any other questions? Just repeat that, sir. Oh, yes, okay. What about him, sir?
What about him? That's what I was asking.
Look, we don't really spend too much time thinking about geopolitics, partly because it's above our pay grade. We don't know that much about geopolitics. Um, a lot of people get, I think, just to sort of take the hint from what the gentleman is suggesting, it is almost seen as par for the course in India to take the hot issue of the hour and get very worked up about it. So people love getting worked up. Either it is COVID, or it is GST, or it is demon, or latest issue of the RS Putin. Tomorrow we'll find something else. There'll be some raging issue tomorrow, right? None of these things actually matter for investing. We can discuss these things over a cup of filter coffee outside, but investing is not these geopolitical concerns are not germane for investing. Investing, as I said, three things that drive your wealth, and I'm not making this up. This is my 20 years of learning from market synthesized to you. Firstly, is the promoter stealing money? If he is stealing money, it does not matter how wonderful his company is. You will not make a dime there. I would submit to you, one and two companies are doing naughty things with your money. Therefore, one and two companies in the stock market are not going to let you compound your wealth. I'm being polite here because it's a public address. So, step one is the promoter stealing, right? Step two, even if he's honest, does he and his management team have any idea how to build a powerful, profitable compounding machine? I've spent 14 years traveling the length and breadth of the country. In 14 years, I've met barely 40 promoters who can actually figure out how to make money. Right? Bulk of the rest of them, many of them are honest, hardworking people, but it's not in their grasp to build a money machine for you. Step two, does this company's management team have the wherewithal, the capability to bat? Just because a player is a nice player doesn't mean he will succeed playing Test cricket in Australia. And thirdly, even if they're clean, even if they're competent, have they applied themselves over 10, 20 years to create barriers to entry which make it impossible for the competition to take business away from them? We discussed Relaxo, right? I told you about Relaxo, the tightest working capital cycle, the lowest cost of manufacturing, and all of these is by a wide margin. If I went on further, Relaxo also has by far the largest distribution setup. They're retailing footwear through 60,000 outlets. If you add up all their formal sector competitors, you will not get 60,000 outlets. They also have, Relaxo also has the widest range of entry-level footwear, whether it is sandals, chappals, sports shoes, the widest range of entry-level footwear. So if you go on Amazon and you put in, say, men's chappal, you'll see Relaxo is offering footwear at 80 rupees, 100 rupees, 120 rupees, all the way to 1000 rupees. At around 150 rupees VKC from your part of the world gives Relaxo some competition. That's about the only competition Relaxo encounters up to 250 rupees. 250 rupees, other people come in, by 500 rupees, even Benetton is selling Hawaii chappals too. Right? So if you step back and look at Relaxo's moat, it's around a crushed working capital cycle, which is difficult for others to copy. It's around massive scale of production, which leads to low cost of production, difficult for others to copy. The largest distribution setup in footwear by far. As I said, you add up all the other white economy footwear manufacturers, they don't have a footprint as large as Relaxo. And finally, the widest range of entry-level footwear. And that is Ramesh Dua Saab's barrier to entry. That's his moat. That's his compounding machine. None of these three things are being affected by the Federal Reserve, hiking rates, Putin firing missiles at Ukraine, the UP election results, whatever else, right? Union budget. A lot of people are going to get very worked about the union budget. So investing actually has nothing to do with current affairs. Current affairs is a separate subject, which is why I think Dhanam is not a current affairs magazine. Dhanam is a finance and business magazine, right? Investing has nothing to do with current affairs. A lot of people mix up investing with current affairs. Some people, in fact, think investing is current affairs. And I think that's the sort of the most bizarre way of saying investing, right? So it's quite boring. We barely buy and sell. We manage 13,000 crores. In a given year, we buy one or two stocks. In a given year, we sell one or two stocks, which is why we're able to write a book a year, because there's nothing else to do. You sit and write books, right? Which is why we're able to come and meet interesting people like you, because you're sitting in the office and trading, like, you're going to be out of your mind. Like, what will you do? I mean, buy, sell, you make the broker very rich. Our job is to barely trade and compound 8,000 families well at roughly the 20-25% mark. Right. So there's only one type of investing that we have seen in India, right? And this type of investing which makes money for our clients. Um, Let me explain our type of investing. There's 4 minutes. Let me explain a type of investing, then I'll try to reconcile this growth value paradox. So I saw the quality of the previous debate was very high. So I presume the audience is also equally switched on. So I'll do a little bit of Excel in my head and just play with me as I do some Excel in my head. Take any company, right? Take Pidilite. If Pidilite's free cash flows compound at 25% for the next 5 years, just for the next 5 years, and thereafter their growth in free cash flows conks off to say 5%. So scenario 1, Pidilite's free cash flows compound at 25% for 5 years, then it conks off, much like in scenario 1, to a long-term perpetuity of 5%. And assume cost of capital for Pidilite is 12%. If you do that on a basic Excel spreadsheet, you'll realize Pidilite's warranted P is around 25. So the scenario 1, warranted P, last column, around 25. So a reasonably decent company, 25% compounding for 5 years, uske baad conking off, long-term perpetuity of 5, 12% cost of capital, warranted P 25. Now, if Pidilite compounds free cash flows at 25%, not for 5 years, but for 15 years, and then it conks off, scenario 2, right? Again, on your basic Excel, you'll see that the warranted P will be roughly around 80 times, right? Which is what the market is broadly saying about Pidilite today. The market is implying that Pidilite will compound at 25% for the next 15 years. By the way, Pidilite's compounded at 30% for the last 25 years, but that's a different story. That's the past. Right? Let's look forward. And if Pidilite compounds at 25% for 25 years, scenario 3, right? If you put it on your basic Excel DCF, you'll see Pidilite is worth actually 250 P. So the investor's job, whether they are value growth, Bulgarian, Romanian, Indian investor, the investor's job is actually to figure out how long will the company compound at the current rate. Right? That's the homework exercise that the market sets for the investor. Right? The market does not set for the investor the homework exercise of second guessing the PE multiple. The homework exercise is actually in that regard, if you think about it, quite tough. And what we do is we break the exercise up into these 3 bars, like the mode score, the lethargy score, and the succession planning score. So let's start with the mode score, the easiest part. Our analyst goes out into the market, meets distributors, dealers, and we tell the analyst, come back and tell us what is the price point, what is the price premium that the company can charge before the competition actually starts having a chance. Right? The higher that number is, the higher the mode score is. So companies like Pidilite, the mode score will be 8 or 9 out of 10. Right? It's a very high number. They have decimated competition in 2 markets. One is adhesives and the second is waterproofing. They're building monopoly number 3 as we speak, but we'll discuss that some other day. So step 1, figure out how strong is the moat. Right? At the moment, the status quo, how strong is the status quo. Second thing, lethargy score. Right? We tell our team, look at the last 10 years of annual reports and tell me 3 things that I am really interested in. Over the last 10 years, what steps has Pidilite taken to reduce the working capital cycle, increase fixed asset turnover? Fixed asset turnover means how much you sweat your factory, right? Working capital cycle is how long it takes you to collect money, right? I need to see reductions therein, reduction in working capital, improvement in asset turnover. What steps have been taken? Quantify them for me. Show me how many new products and services have been added in the last decade, and more specifically, tell us what disruptive strategies have been adopted by Pidilite in the last decade. Again, and the hardest part, succession planning. Is it a Lalaji ka dukaan? Yes, sir. Last part, is it a Lalaji ka dukaan or is it a company which is run by professional management where one man doesn't come into the office and bark orders at staff every morning? So last part is looking at the org structure, speaking to regional management, speaking to the board directors and figuring out, is it a one-man show? You score this on a range of 30. The higher the score, the higher the degree of compounding. Our math suggests Pidilite will compound at this rate roughly for the next 20-25 years. And hence the fair value PE for this is closer to 200, market saying 80, and therefore we believe Pidilite is by an order of magnitude a bargain for the market. The typical investor doesn't do this work and hence ends up saying that the same stock is expensive at 80. If you ask them what is fair value, they will say something like 30. If you put that in your Excel DCF, you'll realize that 30 PE company just has to compound for 5 years, which clearly is not the right number for people. So I'll stop there, folks. Thank you very much for this opportunity.
What a masterful storyteller. Please, a louder round of applause for him. And I would like to quickly invite on stage Mr. Kuran Abraham to present a token of our appreciation to him. He has a flight to catch and he really needs to rush. But Saurabh, it was a delight to listen to you. He is the college professor we never had. You know, so many hooks and teases and interesting suspense creation in his storytelling. Fabulous listening here. Thank you so much. We really wish we had the time for a Q&A with him, but next time. And with that, we quickly move on to the next address, and this is on new trends and challenges in banking. This man needs no introduction to this audience, but still, I'll go ahead and do that. He is an avid supporter of sustainable development, climate change, and democratic governance. He's a former chairman of CII Kerala chapter and a board member of various institutions, including Microfinance Institution Network. But more importantly, he is the managing director and CEO of ESAF Small Finance Bank, founder of the ESAF Group of Social Enterprises. It's my pleasure to present to you Mr. Paul Thomas. Welcome, sir. An amazing success story of a bank which was formed in 2017 and handing it over to him.
Guest speakers, dear friends, a warm good evening to all of you. Thank you, Dhanam, Team Dhanam, for organizing this BFSI summit again. And I think it's after 2 years we are getting together. And Saurabh has made a beautiful story, the India growth story in front of us. So I think my job is very easy to build something upon on the opportunities and challenges for the bank or the new trends and challenges in banking. Banking has been changing for the last 2 decades, we see. From a physical presence to slowly it is moving to a digital presence. From a automation of paper processes to branchless banking setup we are moving. And the growth was slow in the early 20s, but the change has accelerated in the last 2 years of COVID, I would say. So we are really seeing the change. And in the new opportunity, so we heard the story of United Nations, how brands were built, how businesses were built, along with the infrastructure growth happened in US. A similar thing is happening in India. So the infrastructure investment in infrastructure, government of India is investing, state governments are investing in infrastructure. So infrastructure investment, speedy implementation of various projects, continued reforms. So all this is uh, aiming for a booming economic revolution in our country. And as we heard, 95% of the household assets are still in fixed assets. So if 10% is moving to financial assets, we can just imagine, and a percentage of definitely that will come to banks also. And the GDP growth estimation is also is very promising for 2023. The projections are estimates are 11%. So and we are targeting India as a nation. We are targeting for a 5 trillion economy. So all this gives a very good growth opportunity for banks in India. So, and the other fact is that 70% of Indian adult population consists the low and middle income segments. So the aspirations of these segments. So these are all aspiring segments of the society, and their requirements, their financial requirements, the consumption from that side will also increase. So banks definitely all these gives a great opportunity for banks. And a lot of government interventions the last 5 years also really changed the banking scenario or helped or boosted the growth. One such I just wanted to mention the Pradhan Mantri Jan Dhan Yojana scheme, PMJDY. So PMJDY has through that project around 41.7 crore bank accounts were opened in this country. 35.96 crore are still active accounts, operational accounts. So, and 80 during, because of this program, 80% of Indian adults have got bank accounts now. So there are other adult pension yojanas moving the pension, deepening the pension ecosystem in the country, and the Mudra Yojana. So there are all those different yojanas definitely helped or impacted the banks in India, and the technology UPI and the BEAM and similar kind of technologies have also really impacted the growth. And specialized banks. So in 2014, Reserve Bank of India introduced differentiated banks in our country, and ISA got license under that category, small finance category. Small finance banks and payment banks were introduced in our country, and today we have 12 small finance banks and six payment banks. So that really is differentiated, specialized segments were focused for example, small finance banks are focusing on unbanked and underbanked segments of the society. So we are reaching out to the last mile. So serving the last mile person through various financial products. So that's another great change happened in the last 5 years. So, and the new trends, if you see on the asset side, the buy now, pay later, BNPL is one is becoming taking great momentum, and the open credit enablement network, the OCEN, is going to change the credit ecosystem, the asset ecosystem for the banks, and the account aggregator that's already RBI has already given permission to few companies, and account aggregator will also will definitely it's a great transformation is going to happen in our country. And on the liability side, banks definitely have a customer confidence. The trust, people still have that trust on banks. If they see a bank licensed by Reserve Bank of India, people definitely wanted to invest money. But the neo banks, the new apps, and all giving a lot of comfort to the customer. But these banks are these apps and neo banks are also trying to partner with the banks. The other major change in the banking sector is the digitization. We all know that, and I'm not going to the details of it. It's become any bank, whether it is small or universal bank or payment bank or any cooperative bank, even for a small cooperative bank, if you are not digitized, if you don't have a mobile banking application, if you don't have an internet banking application, we are out of business. So that's another great change. So the penetration of smartphones in our country, more than 93 crores smartphones are there. That one recent statistics I have seen, and 61% of internet penetration. So that really boosts the mobile banking and internet banking scenario in India. And payments, the UPI transaction as on February 22 82 billion plus transactions so far happen in UPI, and the value is 1.7 trillion US dollar value. You can imagine the impact in the payments space for the last 5 years. And the other changes as artificial intelligence and robots are being used for customer support to assist customer support. It's just beginning, but going forward, more and more banks will start using these technologies for servicing customers. And the other major change is the fintech evolution of fintech companies. Certainly now banks don't have to invest in technology. Actually, the new age technologies, lot of investment is happening in the fintechs. Global investments are happening. So banks need to partner with the fintech. So we can bring in any new age technology without having a big investment, capital investment. That's another great change. And with how the pandemic has affected the change. I said earlier, the change has been accelerated during the pandemic time. So in March 2020, only 150 banks and payment service providers were in the UPI. But in 6 months' time, in October 2020, it becomes 190 institutions. As of today, it is more than 300 are there in NPCI platform using using UPI. And front-end digitization, straight-through process, digital account opening, all those things were happened. And work from home. We never thought, traditional bankers like my friend Tarian and all here, we never thought banks can function using work from home. But we introduced work from home in March 2020, and we found that now most of our operations, back-end operations, are being managed, and it is becoming very efficient also. The efficiency also, productivity also increased. So these are all the great changes happened during these last 2 years. Due to paucity of time, I will just move on. And the other change is a few years before banks have to wait to get a branch license. Now, no bank is bothered about branch license because banks are now identifying branches which can be closed. So reducing the brick and mortar branches, that is a major shift happened. So even we have multiple other channels available, reaching out to the customer and do business. That's another major change. So because of what are the challenges banks are facing in the changed scenario? So one major challenge is that in the data sharing, we are forced to share the customer data to the partners, to fintechs, and in the emerging open environment. So there is it associated with the data breach and data security issues, data integrity, and data hygiene issues are there. So we banks have to find ways to manage these issues. The other one major challenge we are facing, as I mentioned about fintechs. So fintechs, it is like a marriage between uh, 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 the fintech. So banks is a big machine. I know I am only I started banks only after Isaf Bank is only 5 years old, but even I know the reality now. To take a decision to get something done in a bank, it takes time. But fintechs are very agile, young people, very young, vibrant. So banks are finding very difficult to work with those agile fintech companies. And the other challenge is, especially banks like us, which is focused on rural and the last mile. So to make people aware, to give financial education, financial literacy, digital literacy, digital financial literacy, these are all biggest challenges. And the other biggest challenge is the frequent changes, frequent upgradation required on the technology. Yes, now SaaS, all cloud technology, all are available. So slowly, that in capital investment is coming down. The other major changes in the sector is that how the future of the bank will be. Future of the bank will be mostly, maybe not immediately, it may not happen in India, but it has started. RBI has already shared a discussion paper on digital banks. So in other countries, in UK, UAE, US, and all, many digital only banks are very active now. So that will also come to India very soon. And the discussion paper says you need only 20 crores capital to start a digital bank, universal digital bank. So more and more, many neo banks today may get converted as a digital banks. So that will definitely pose a threat to the traditional universal and small finance banks like in the country. The other important change is that banks never thought that there is money in payment space. So banks considered it as a burden. But new age with UPI, the new age players like Beam and PhonePe and Google, they are now taking 85% of the transactions in UPI is happening through these platforms, and we are seeing they are making money. So banks recently Uday Kotak has in a forum he has alerted all the bankers to seriously think about payments to reconsider. And the other change in India is going to take space is that from 2006 onwards, Reserve Bank of India introduced the business correspondence in a big way. So it took almost 15 years to take shape. Now recently, it's a recent development is that now Reserve Bank also relaxed the eligibility. Now an individual can also become a BC of the bank. Now, so agency banking, which was very popular in African countries like Kenya and all, is very helpful to give the banking service for the at the last to deliver the last mile services. So agency banking coupled with technology is going to be the rule. Now any kirana shop, medical shop, a retired banker, a retired teacher, former panchayat member, everybody can become a bank representative in a village. So Visa Bank is going in a big way. Already we have 1,000 agents we have appointed. So we have branches 575 branches only, but we have 1,000 touch points other than so managed by our business partners. So now Reserve Bank also permitted branches, as full-fledged branches also can be managed by our business correspondents. So agents, so we know in our country the life insurance business has been not driven by agents only. So that is now coming to the banking space also, even not payments, loan sourcing, account sourcing, everything can be done through a tab or through a mobile, and that gives micro ATM service through my micro ATM service to tab banking, and this is already got momentum, and in the next couple of years, agency banking is going to, because complete digital banking in India will take time. So the assisted digital model, this agency banking model will definitely will in next another 2-3 years. This will be the major change going to happen. So agency banking, digital, and the account aggregator. These are all, and fintech partnerships. These are all some of the changes, the new trends in banking. So most of the banks in India have already have at least 2 to 3 fintech partnerships. So, and this is going to, especially in the area of the co-lending, MSME lending, and account opening, digital account opening. These are all the areas mostly the fintech partnerships are happening, and more new fintechs are emerging on a daily basis. So definitely, I'm seeing a lot of partnerships, fintech partnerships will happen. Agency banking will take momentum, and you will see in any corner, any nook and corner of our country, you will get a banking service accessible. So with this, I stop here, and thank you, Dhanam, once again for this opportunity to talk about the new emerging trends in the banking sector. Thank you very much.
Thank you, sir, for that invigorating delivery on this topic. And I'd like to have on stage Mr. Abraham Tarian to present a memento to Mr. Paul. A man whose success story never stops to fascinate us. Such a pleasure to have you. Thank you. We are quickly going in for a networking tea break, but before that, I'd like to let you know that Mr. Nandakumar from Manappuram Group was supposed to join us today, but he cannot, because someone close in the family has passed away and he had to be there. So he expresses his inability to come here and conveys his regards to you all. On that note, let's quickly go for a tea or coffee as you prefer and come back here bang in 20 minutes. Meanwhile, we'll have music and variety entertainment going on the stage. Carry on and come back in 20 minutes. Thank you. ഇപ്പൊ എന്ത് പറയുന്നു ബി പി സർ?
Okay, let's do it.
കാഫയ്ക്ക് വേണ്ടി ഫണ്ടിങ് വേണ്ടേ? ഫൈനാൻസ് അറിയില്ല.
അതൊക്കെ ഉണ്ട്, FDs ഉണ്ട്, മ്യൂച്വൽ ഫണ്ട്സ് ഉണ്ട്.
കഷ്ടപ്പെട്ട് സമ്പാദിക്കുന്നത്
അപ്പോൾ എന്താ ചെയ്യാം?
വീട്ടിൽ വെച്ചിരിക്കുന്ന ഓരോ സമ്പാദിക്കാൻ വേണ്ടി.
പക്ഷേ ഗോൾഡ് ലോൺ
നിങ്ങളുടെ സേവിങ്സും നിങ്ങളുടെ ബിസിനസ്സും
കേട്ടില്ലേ?
അവിടുന്ന് ഇവിടുന്ന് ഫൈനാൻസ് ഗോൾഡ് ലോൺ മാത്രം. കുറഞ്ഞ പലിശ, മാക്സിമം ലോട്ട്, നേരിട്ട് പണം കയ്യിൽ ലഭിക്കും. സൗകര്യവുമുണ്ട്. ഇവരെ പോലെ നിങ്ങളുടെ സന്തോഷങ്ങൾക്കായി സ്വയം ഫൈനാൻസിൽ നിന്നും ഗോൾഡ് ലോൺ
ജീവിതത്തിൽ മുന്നേറും. 9946901212 കോൾ ചെയ്യൂ.
Yes, we got the contract.
Congratulations.
Deadline ഉണ്ട്. സപ്ലയർക്ക് അഡ്വാൻസ് ഇന്ന് കൊടുക്കണം.
അക്കൗണ്ടില് അത്ര പൈസ ഇല്ല. ഓ യെസ്, ഗോൾഡ് അൺലോക്കർ.
മുത്തൂറ്റ് ഫൈനാൻസ് ഗോൾഡ് അൺലോക്കർ. നിങ്ങളുടെ പേഴ്സണൽ 24/7 ക്രെഡിറ്റ് ലൈൻ. എത്ര തുകയായാലും എപ്പോഴും എവിടെയും നിങ്ങളുടെ സ്വർണത്തിന്റെ മൂല്യത്തിനൊത്ത് മുത്തൂറ്റ് ഫൈനാൻസ് ഡിജിറ്റൽ ക്രെഡിറ്റ് അക്കൗണ്ട് തുറക്കും. എപ്പോൾ വേണമെങ്കിലും എത്ര വേണോ അത്രയും പണം എടുക്കാം. ഉപയോഗിച്ച പണത്തിന് മാത്രം ഇൻട്രസ്റ്റ് അടച്ചാൽ മതി. അപ്പോൾ നിങ്ങളും 9946901212ലേക്ക് കോൾ ചെയ്യൂ. മുത്തൂറ്റ് ഫൈനാൻസ് ഗോൾഡ് അൺലോക്കർ എടുക്കൂ. ജീവിതത്തിൽ മുന്നേറും.
ഇതിലും
എനിക്ക് നാളെ തന്നെ ലോൺ കിട്ടുമല്ലോ അല്ലേ?
ഇല്ല മാഡം, 3-4 ദിവസം. അടുത്ത ആഴ്ച തീർച്ചയായും.
അടുത്ത ആഴ്ചയോ?
മാഡത്തിന് ലോൺ വേണമോ? മുത്തൂറ്റ് ഫൈനാൻസ് ലോൺ ആൻഡ് ഹോം സർവീസിലേക്ക് വിളിക്കൂ. ഉടൻ ഗോൾഡ് ലോൺ നേടൂ വീട്ടിലിരുന്നു കൊണ്ട്. വിളിക്കൂ 1-800-202-1212 എന്നിട്ട് ജീവിതത്തിൽ മുന്നേറും.
പ്രിയ, നീ ചെയ്യുന്നതും ഞാൻ ചെയ്യുന്നതും ഒരേ ബിസിനസ്, രണ്ടുപേർക്കും ബുട്ടീക്ക്. പക്ഷെ നീ എപ്പോഴും ബിസിനസ് ക്ലാസ്സിൽ ഫ്ലൈ ചെയ്യുന്നു, ഞാൻ എക്കോണമി ക്ലാസ്സിലും. മോളെ ഞാൻ സ്ട്രെയിറ്റ് ആയിട്ട് ചോദിക്കുക, ഈ എക്കോണമി ക്ലാസ്സിൽ നിന്ന് ബിസിനസ് ക്ലാസ്സിലേക്ക് കയറാൻ ഞാൻ എന്നതാടി ചെയ്യണ്ടേ?
ധനം വായിക്കുന്നത് ഒരു ശീലാക്കിയാൽ മതി, ബാക്കിയെല്ലാം ഓട്ടോമാറ്റിക്കലി ശരിയായിക്കോളും.
ധനം, ബിസിനസ് ലോകത്ത് അറിയേണ്ടതെല്ലാം.
എന്നിട്ട് ടീച്ചർ ലക്ഷ്യം എന്താന്ന് ചോദിച്ചപ്പോ നീ എന്ത് പറഞ്ഞു?
അച്ഛനെ വിൽക്കേണ്ടി വന്ന നമ്മുടെ വീടും സ്ഥലമൊക്കെ ഞാൻ തിരിച്ചു പിടിക്കുമെന്ന്.
കുട്ടി പഠിച്ച് വലിയ ഡോക്ടറോ എഞ്ചിനീയറോ ഒക്കെ പോയതൊക്കെ നമുക്ക് തിരിച്ചു പിടിക്കാം.
എനിക്ക് വലിയൊരു ബിസിനസ്സുകാരനായാൽ മതി മുത്തശ്ശി.
അതിന് ബിസിനസ് എന്താണെന്ന് പഠിക്കണ്ടേ വിഷ്ണു?
പഠിക്കാൻ തുടങ്ങിയില്ലോ. പിന്നെ എന്തിനാ അമ്മേ മുടങ്ങാതെ ഞാനിത് വായിക്കുന്നത്?
ധനം, ബിസിനസ് ലോകത്ത് അറിയേണ്ടതെല്ലാം.
സൂപ്പർ ടേസ്റ്റ്.
ചേട്ടാ കാഫേ.
വിവേക്, താങ്കൾ ഒരു കാഫേ തുടങ്ങിക്കോളൂ.
most of us are outside, and if anyone's listening, please start assembling back in the hall. There are two reasons. One, there's lovely music being played for you. You really need to listen to some of it. Two, we also need to kickstart our knowledge session soon, so after the break. So please do come back in. If any of you here have friends outside, please call them inside. And I'd like to request our volunteers to also spread the message outside so that we can have all our guests back inside the hall. Dhanam team, please help me with that. Abhijit, back to you. Glad to have a lot of you back in the hall. but we still have many more people outside. We'll just wait for 2 more minutes while Abhijit enthralls us with some more music, and then we'll get started. Thank you, Abhijit and Sandeep, for entertaining us yet again. And we will have a third segment after our knowledge sessions on the stage. And with that, we quickly move into the second part of the Dhanam BFSI Summit 2022, where we resume the knowledge sessions with a really, really important and a very special address. This person talking to us here, he joined the Life Insurance Corporation of India in 1983, and in a career spanning more than 3.5 decades, he has had the unique privilege of heading 3 zones of LIC of India, namely Southern Zone, Northern Central Zone, North Central Zone, and Northern Zone. And his rich experience working pan-India and in different streams of insurance management has given him deep insight into the demographics as well as the insurance potential of this vast country. He also chairs the boards of domestic and international subsidiaries of LIC of India. He's also director on the board of the Ken India Assurance Limited, which is a life and non-life assurance company based at Kenya. Of course, you all know who I'm talking about. And this person should have been here on this stage talking to us, in person as the chief guest of this summit. But because he is attending to some important developments of an event that the entire country is clued into, the LIC IPO, he couldn't be here physically, but he has videotaped his entire address and sent it to us with amazing thoughtfulness. And so, presenting to you the address by our chief guest tonight, not present here physically, but with us in spirits and on the video coming on screen, Mr. M.R. Kumar, Chairman of the Life Insurance Corporation of India.
Good afternoon, ladies and gentlemen. It's a great pleasure to know that Dhanam is organizing BFSI Summit 2022. While I'm not able to make it personally there, I value this opportunity to send across some of my thoughts to you. It's indeed wonderful that Dhanam BFSI Summit 2022 is a physical meet. Though Omicron has been making it difficult to visualize that the pandemic has finally ended, this summit comes as a mark of resilience to reimagine, rebound, and rebuild. In the early stages of the pandemic, from March to July 2020, a rapid return to normal was on everyone's wish list. We all hoped that the virus will be quickly brought under control. None of us would have imagined that it would last longer than 2 years. However, wave after wave, version after version, COVID-19 had stayed with us, forcing rapid transformations in the way we worked, the way we interacted, the way we transacted, and the way we lived. Imagine a person who slept in March 2020 and woke up in March 2022, he will be surprised to see the changes in our transactional behavior. We changed and we swiftly adapted to new behaviors in the wake of COVID-19 crisis. As we became socially distant, we got more and more connected virtually. We stopped visiting malls, theaters, banks, clinics, colleges, but all of these squeezed into our palm in the mobile phone. While we did wish to return to normal in the early days of the pandemic, ask anyone today if they want to return to the pre-COVID normal, answer would be a big no. There is no way reverting to a model that is no longer applicable in the world we now live in. By now it is clear that the mantra post-COVID is not back to normal as we normally say, but I believe that it is build back a better normal. Looking back and going back is not even an option today. The sudden acceleration in digitalization and digital engagement led to disruptions of many old business models and brought in many new operators, newer business models. The world post-COVID is a changed world, and the winds of change are not transient. Under these challenging times, growth and success belongs to those who are able to spot the change early, respond to it, and exploit it as an opportunity. Waves of digitalization were already strong since past few years. COVID-19 has turned these waves into a digital tsunami. India's digital journey is one of exuberance. Our country had the world's second largest internet population at over 749 million users in 2020. Of these, 744 million users access the internet via their mobile phones. Estimates suggest that this figure would reach over 1.5 billion by 2040. About 67% of Indian urban population and 31% of rural population used internet in 2020. The digital adoption is fast increasing in rural India with a spurt in smartphone usage as the total active internet population is likely to touch 900 million by 2025. And it is estimated that by then, there would be a greater number of internet users in rural India than in urban India. Can you believe that? Today, we have become used to making purchases with a touch of our finger. Wherever we are, receiving tailored recommendations, choosing customized products, enjoying delivery of almost anything directly at our doorstep. Unprecedentedly fluid and interdependent. It will be marked by the continued emergence of new disruptors such as fintechs and digital giants with innovative business models with interconnected ecosystems. Ubiquitous computing power, pervasive connectivity, mass data storage, and advanced analytical tools are transforming customization in product and services. The newer platforms are increasingly allowing customers to service their own needs. So these changes are making customers more sophisticated. The services today are becoming more commoditized and disintermediated. Heightened digitalization can provide convenience and enables customized services to customers. Also, every digital transaction leaves a footprint in the digital world. And this has led to the emergence of a new factor of production, which all of you know is DATA, nothing but data. As advancing technology expands, the quantity and quality of data sources and access to data flow is going to become a critical resource. Today, any organization's ability to meet customer expectations hinges on its access to data and insights from this ever-increasing flow of data. Successful organizations will be those who reinvent their data strategies to stay competitive while striking a delicate balance between sharing data with alliances and maintaining stringent control over proprietary information. In a world where technology cloning is leading to commoditization of services, it has become clearer than ever that data is the key to hyper-personalization for meeting every customer need competitively. The established BFSI players today face competition from more directions than ever before, with fintech startups, big retailers, tech giants like Google, Amazon, and Apple, all signing up customers for services that traditionally were the domain of BFSI. Artificial intelligence, smart data-driven technologies are a key tool for all of these new competitors. Faced with new disruptors, the traditional banks and insurance companies have no choice but to adopt smart technologies themselves if they hope to stay in the game. It is predicted that the financial services industry will be second only to retail when it comes to spending on AI, that is artificial intelligence, between 2021 and 2025. Engaging technologies like AI and machine learning will open up new vistas for business development. This not only reduces the cost of operation significantly, but cuts the process time also. AI-powered customer journey mapping and understanding customer behavior are proving to be critical tools in creating a positive customer experience virtually. A well-designed and integrated virtual channel interaction bridges the gap between customers and service providers and brings them closer, thereby improving the turnaround time in all transactions considerably. Remember, friends, back in the 1990s, few could have imagined the extent to which the internet world would transform the world. When Amazon started as an online bookseller in 1994, its first customers would never have expected it to expand its offerings into groceries, devices, cloud computing, streaming services, etc. Today, cryptocurrency finds itself in a similar position with limited awareness of its ability to reshape the financial landscape and its capacity for positive global impact. Cryptocurrencies were invented to improve the way people create, store, and transfer value. However, they have the potential to serve the higher purpose of financial inclusion by providing an investment and transaction option to everyone, irrespective of nationality, ethnicity, race, gender, or socioeconomic class. Today, there are over 1.7 billion unbanked people in the world, including 190 million in India. India's online population ranks second globally. The growing base of online citizens, coupled with the focused program for digitization and financial inclusion in our country, has helped consumers become more aware of and warm up to the digital exchanges and cryptocurrencies. In a country like ours, where very people are underserved by traditional financial institutions or are unable to access their services, crypto finance enables them to make financial transactions quickly and cheaply. Moreover, cryptocurrencies open up a new asset class for consumers to grow their wealth as a form of investment. A recent PwC report says that it is highly probable that the future of money in India will be a mix of centralized, decentralized, account-based, and token-based models. This would take the form of central bank digital currencies, stable coins, and cryptocurrencies coexisting alongside traditional digital and physical currencies. Embracing cryptocurrencies will not only support India's financial inclusion goal, but also lower the cost of processing transactions. We live in a dynamic world. Here change is inevitable. However, growth is an option. Adapt or perish. The low penetrated Indian financial market is a vast land of opportunity for the BFSI. Last year in April, the Reserve Bank of India had released a composite financial inclusion index called FI index based on multiple parameters to reflect the broadening and deepening of financial inclusion in our country. The annual financial inclusion index for the period ending March 21 was 53.9. About 190 million adults in India do not have a bank account, making India the world's second largest nation in terms of unbanked population after China. India's life insurance penetration stood at 3.2% in 2020. At 3.3%, the global average life insurance penetration is slightly higher than India's penetration. Our insurance density is also very low compared with other developed and emerging market economies. A mere $59 as compared to China's insurance density of $241 as of current year 2020. Financial year 2020. The protection gap of our country was $16.5 trillion as of 2019, which is much higher compared with Asian counterparts. The protection gap for India was 83% as of 2019, the highest among all countries in Asia Pacific. This means that for rupees 100 of insurance protection requirement, insurance was only taken for rupees 17 as of 2019. This indicates the absence of protection coverage for a large part of the population, and insurance penetration, insurance density, mortality protection gap, and the financial inclusion index, all parameters amply indicate the vast potential for financial services in India to grow. What we require is to reimagine such business models that will create a win-win situation for all stakeholders. The massiveness of potential for future growth becomes evident as we juxtapose low penetration of financial services against the demographic data of India. As per the census of 2011, India's population was about 1.2 billion, and comprise nearly 245 million households. Population expected to reach 1.5 billion by 2031, and number of households is expected to reach about 376 million over the same period. We have one of the largest young populations in the world with a median age of 28 years. And further, urbanization is one of India's most important economic growth drivers. Our country's urban population has been rising consistently over the decades. In 1950, it was 17% of the total population. As per the 2018 revision of World Urbanization Prospects, it is estimated 34% and expected to reach 37% by 2025. With increasing urbanization, income is expected to increase, which will lead to higher consumption expenditure going forward. India was one of the fastest growing economies in the world pre-COVID, with annual growth of around 6.7% in between calendar year 2014 to 2019. While economic growth in calendar year 2020 has been dented due to COVID-19, the economy is expected to rebound, and India is set to regain its tag as one of the fastest growing economies globally in the medium term. The decade ahead is full of promises and bright opportunities. Increased literacy, financial awareness, rapid urbanization, rising consumer aspirations, and increasing digitization, coupled with government support in the form of reforms and policies, is expected to support growth for BFSI industry. The Indian BFSI stands on the threshold of transformation. The market is growing and the future holds great promises. It's a vast market which cannot be expected to saturate very fast. Let us look forward to a healthy and vibrant next decade where BFSI is able to leverage the opportunities available in terms of digital technology and low financial inclusion index in India. Friends, I am reminded of the words of Nelson Mandela, where he said that overcoming poverty is not a gesture of charity. It is an act of justice. It is a protection of a fundamental human right, the right to dignity and a decent life. While poverty persists, there is no true freedom. Sometimes it falls upon a generation to be great, and you can be that great generation. That is what he said. Let's come together to collaborate and create the best solutions for customer in every strata of our society at optimum costs and returns for all partners, thereby creating a win-win for all. I sincerely thank the organizers for giving me this opportunity. I wish you all a very pleasurable and enlightening experience at the BFSI Summit 2022, and thank you very much.
What a succinct roundup of the Indian BFSI scene. Thank you, Honorable Chairman of the LIC, and we really hope that he'll be able to come and join us, in person at our next event, at a befitting event for him. And with that, we quickly move on to the next address, and this is going to be delivered on the topic, Changing NBFC Scene, what are the challenges and opportunities that this presents? And this is going to be delivered by the Managing Director of an organization which is one of the biggest players in the gold loan market, in India, with close to 14% of market share. And they have 185 tons of gold sitting in their lockers. Like, how fascinating is that? And there are about 20 different, business sectors in which Muthoot Group has made its mark. Presenting to you the Managing Director of Muthoot Finance with more than 4 decades of experience in the finance sector, George Alexander Muthoot. Welcome, sir.
Thank you for the kind words of introduction. It's great that Dhanam could organize the BFSI Summit 2022 in person here. In fact, last 2 years, we have missed such an opportunity. This was always an occasion for us to get together with Dhanam. And we should, first of all, thank God that at least this year we are able to do it. and of course, congratulate Dhanam team for having made this possible. With that, I should come to why I have been invited here to speak about opportunities and challenges in the NBFC sector. NBFC, sometimes I personally feel, it starts with a negative connotation. Non-banking. They should not start something with saying negative, non-banking. Some people call it shadow banking, as though the NBFC people are doing something very shady things. So this is what actually the press also has not, many of the organizers, many of the institutions are now not using the word shadow banking, but still some media sometimes uses shadow banking, which sometimes pains me also personally. And we have been talking to the regulator also to take away this word non-banking and say something else like financial sector or don't start with non-banking. So that apart, that aside, what is NBFC first of all? It is also doing finance business. So looking at the pecking order, you can think that first on the top list where everybody sees is the banks, the scheduled banks, all the PSU banks, etc. They come as banks. Then this NBFC, non-banking financial sector. Then you have in Kerala and other places, we have this registered authorized money lenders and pawnbrokers. And of course, the vast majority of unorganized lenders. So in this order, we should see where NBFC stands. If you ask me personally, NBFC plays a very important role in financial inclusion. That is, it takes the finance or it delivers finance to the last mile where big institutions and banks at one time were not able to. Don't look at what banks, etc. are doing today, because everybody is doing everybody else's job. Earlier we had institutions like IDBI, ICICI, IFCI, which were institutions which were funding big industries. Then banks started entering that field and started funding this, of course, to their peril. They realized that they have been borrowing short-term money and lending very long-term money. So anyway, the IDBI, ICICI, IFCI, etc. stopped business. That has been taken over by banks. And when banks came there, they realized that all these are not very good. They started retail lending, which actually should have been the forte of the NBFC. So they have also started to do that. And NBFCs in their turn have started doing the work of money lenders, pawnbrokers, etc. on an organized scale. But then today, we are here to talk about NBFCs. What are their opportunities today? An NBFC can actually do everything which a bank does. Every lending which a bank does is permitted today by an NBFC. Whether it is corporate loans, that means big time loans, housing loans, microfinance loans, gold loans, MSME loans, personal loans, any lending, an NBFC is permitted, authorized by the regulator. The regulator is the RBI. They are regulated to do it. Only one thing they are not permitted to do is to accept public deposits. Public deposits in the form of savings bank account or a current account or a fixed deposit account from the public is not permitted. But so that being the case, all the NBFCs have so many avenues for getting funds. Either they can get funds from onward lending from banks, or probably issue their non-convertible debentures. Big companies also are able to access very cheap funds in the name as commercial papers from banks. Those comes very cheap. And today, if the bigger NBFCs are able to access very cheap funds from the market. In today's parlance, today's banking scenario, it is not the funding which is the difficult part. It is the good borrowers, finding good borrowers and lending to them. That is the challenge today. If you have a good product, if you have a good lending portfolio, there will be n number of people, institutions, banks, mutual funds, everybody to finance you. Today I said NBFCs are unable to accept not to accept deposits, etc. But they can accept funds from mutual funds. They can accept funds from all sorts of other agencies, corporate funds, etc. So then, what are the opportunities in the NBFC sector? Take each sector. Take the housing sector. Housing sector also requires lot of funding. Everybody needs house, everybody needs funding. But then when it comes to the lower strata, where you should see affordable housing, that is where the NBFCs have a big role. Affordable housing. Probably the definition of that would be houses costing around 25 to 30 lakhs. That is a place where banks and other big institutions are not very comfortable. So there's an opportunity for people, NBFC sector, to do housing finance, take the risk, study the customer better and properly, and then give him finance. These smaller these companies will be able to assess the creditworthiness of the borrower much better because they have the last mile connectivity. They are in the ground, in the field, compared to a bigger institution. Usually what happens is, many NBFCs originate the loan, they keep it in their books, run the housing loan for 1 year, 2 years. When big banks see that it is a good account, they just take over. And unfortunately, in the housing finance sector, there is no prepayment charges. So anybody can close any loan from anywhere. So if somebody is offering a much lower rate of interest from a bank, the account gets taken over. But then still there is a lot of business opportunities there. We have the vehicle finance also. You look at the new vehicle finance. The new vehicle finance is dominated by big players and banks. You see all the advertisements in banks, by banks saying 7%, 8%, 9% or even lesser to their set of customers, their set of account holders. But there is yet here also, there is another set of customers, especially the two-wheelers, maybe the two-wheeler business, where there is a lot of opportunity and business there. And also the used vehicle segment. The used vehicle segment is very large. The used vehicle can be a car, a four-wheeler car, or a commercial vehicle. Here also, NBFCs play a very large role there. Now coming to the microfinance. Microfinance is also, as the term indicates, it is the money given to the lowest of the lower people for their business activities, which is also growing from strength to strength. It is a very big portfolio. And microfinance institutions, MFIs, who do this business, do it well, and they are able to maybe offload these accounts to bigger banks who will study the portfolio and do it. So here also, there's an opportunity for NBFCs to do microfinance, probably with their own funding, or also doing it for some bigger banks who just take it over. That is the way the world was. Then coming to our area or area of gold loans. Here also, it is the smaller ticket loans. The average ticket size can vary, the lowest ticket size can vary from 5,000, maybe going up to 1 lakh, 3 lakh, 5 lakh. And today, the average ticket size for us is about 40 to 50,000 rupees. Here also, it is a business which requires lot of processes, lot of challenges. It is not very easy business, but then opportunities are there for smaller companies also to do this gold loan business. The gold loan is, actually people shouldn't be calling it gold loan, it should be called jewelry loan, because none of the NBFCs finance gold per se. That means they don't finance gold bullion or coins or biscuits, etc. But usually they give, or generally they give only household ornaments. There is such a lot of potential for this business because today the estimated gold holding in the country is about 28,000 tons, 28,000 tons. So keeping on the tonnage, somebody here was saying that Muthoot holds 170 tons of, we have 120 tons of gold. But unfortunately, not unfortunately, it is somebody else's gold. We have no proprietary, no ownership on that. It is somebody else's gold which is kept by us. Actually, it is a headache for us because we have to be very careful with the safety security also. But then it's a business which the gold, of course, the gold is there. It is only a collateral, somebody else's gold. But then what I was saying was the opportunities for that. 28,000 tons of gold is there. And today in the organized market, not even 2 tons of gold or 3 tons of gold have come into the organized market. Organized market has been able to attract only 2 tons of gold as or much lesser as gold loan in the banking sector, banking and the gold loan sector. So there's an opportunity there. What we have also done, we have in the past tried to increase or market the concept of gold loan. The concept of gold loan which was there or which is there in Kerala and probably in Tamil Nadu and few South Indian states. Muthoot, we actually started the concept in North India. Just while I was standing outside, somebody was telling me that his bank chairman used to ask his Bihar manager, why Muthoot is able to do such a lot of gold loans, why you are not able to do? And that Bihar manager used to ask, what is Muthoot? Is it something where you eat? Is it a hotel? Something, he doesn't know that. But then we have been able to advertise to the North Indian market to promote gold loan as a product. Initially, 20 years back or 25 years back, when we thought of this advertisement campaign, we had Mudra as the campaign, as the agency. So I asked, when we were discussing, they said, you must invest in advertisement so that you are able to market the concept of gold loan in North India. Then I asked him, suppose we increase the market, we advertise about the concept of gold loan. Finally, somebody else comes and takes away the business. Then our advertisement spend or ad spend is lost. Then he said, you are the market leader. It is your duty to increase the market size. Today, what we are seeing, today in the last 1 year after the pandemic or during the pandemic, we have seen a lot of advertisements in newspapers about gold loans. Gold loans at 6%, 7%, 10%, come fast. Now, every bank worth its name is also doing gold loan. And people ask me personally, what happens if so many people are doing this, so many banks are doing this, they offer lower rates, they'll offer other things, etc. Won't you be affected? Certainly, any competition, people get affected. But then, what we see is that the market is expanding. You just heard the chairman of LIC say that the market penetration even for insurance in India is only 17%. Same goes for the gold loan sector also. Not even 17 to 10% of the total gold has come to the market. So when all these big banks, new generation banks, etc., advertise about gold loan, people who are earlier reluctant to come forward and bring their gold and take a loan are understanding that it is definitely a smart proposition, and they are coming forward to take the loan. That is why you see all the banks, all the institutions, even Muthoot, have been able to increase their business, not at the cost of somebody, but the market has grown. So the same is the case with every other lending. As I said, home loans, vehicle loans, personal loans, SME loans. The opportunity for lending is huge. Just like the opportunity for insurance is huge, the opportunity for lending is huge. People are getting more and more prosperous. They are spending more, and they need money. And what else than an NBFC which can do the last mile lending? So the last mile lending is always the strength of the NBFCs. As an NBFC, there is opportunity there. So the second point of my deliberation here was, what are the opportunities and what are the challenges? So I told the organizers also, this is not a forum for me to come and say the challenges in the NBFCs, the challenges we are facing. It is our job to, overcome all challenges. But I wouldn't call some of these things which I'm going to say as challenges. It is the regulators, etc., have not really understood sometimes I feel that they have not really understood the significant role played by an NBFC in the last mile credit delivery. Because of that, sometimes they feel that some of the NBFCs may fail, and they come up with more and more stringent regulations. But of course, regulations, when it comes, there is no go other than to abide by it. Big companies, everybody abides by it. It strengthens and makes the industry more resilient, etc. But sometimes at a little cost. Some cost is also involved. That means some of the business may not be able to do as well with all these stringent regulations, rules. It is definitely good for the sector, good for big players, but sometimes some of the regulations very affect or maybe hinder the growth of smaller NBFCs. But then all these challenges are there. It is for us, the industry, to overcome these challenges, to adhere to the regulations and do a good business. So the opportunities in the NBFCs, as I said, is very much there for good players, strong players, focused players. Why I said this is occasionally it happens that in 2010 or 11, when Muthoot went public, it was at that time that the gold loan business became known to the whole country. And there is a gold loan business. There are companies who are growing very big, so much of opportunity. So many companies wanted to start gold loan business. They just entered the business. Unfortunately, gold loan business is not an easy business. Unfortunately, they faced small issues, and of course, they were not focused. And many of those players who came and started the gold loan business went back. They withdrew from that. The same is the case which is happening now. Many players are trying to enter the gold loan business because in the last pandemic, many other forms of lending have been difficult. Recoveries have been difficult, but gold loan recoveries were okay. So now many have entered. Probably in the next 1 or 2 years, some of them will lose focus. Many of them will lose interest, and then it will be back to the focused players. Why I said that is, if you are focused in a business, whether it is gold loan business or an NBFC business, if you are focused, if you are keen about the business, it will thrive, and you should be patient. So, an advice to all the people who are trying to enter the NBFC sector: you will have challenges, but then stay focused. If you are in your heart, you are sure and confident of the business which you are doing, there's a great opportunity, and I wish all of you the best in that. And once again, thanking the Dhanam management for giving me an opportunity to speak to you. Thank you. Goodbye.
To present a token of our appreciation, I'd like to bring on stage Ms. Maria Abraham, our Executive Editor. And thank you, sir, for delineating the facets of how NBFCs contribute to the financial scene of our country. That's Ms. Maria Abraham presenting a memento from Dhanam Publications to Mr. George Alexander Muthoot. The next keynote address is on what the future beholds for the insurance industry. And the person who is delivering this keynote address is a postgraduate in commerce from Andhra University who joined LIC in 1986. And with her rich and diverse experience of more than 35 years in LIC, she has worked in various capacities, various assignments, various projects with much success. She also serves as the chairperson on the board of LIC HFL Care Homes Limited and as the chairperson on the board of LIC Bangladesh Limited. She's also been recognized as India's top 100 women in finance in the year 2020 by the Association of International Wealth Management of India. Very, very proud to present to you Ms. Mini Ipe, Managing Director of Life Insurance Corporation of India.
Dignitaries, guests, invitees, and all the participants of Dhanam BFSI Summit 2022. A very good evening to all of you. At the outset, I would like to thank the organizers of the Dhanam Summit for giving me this opportunity to present this keynote address. I'm sure all of us present here will go back enlightened with all the lovely ideas and the insights that we got for enriching the financial industry in our country. The topic for this year's summit is managing change and growth challenges, which I think is very relevant in the present times. No business entity in today's world can be rigid to the continued changes and disruptions. COVID was a major disruption for majority of business models. However, now most of the entities, including the insurance industry, have got used to living with the pandemic. Work from home, digitization of business processes, WebEx and Zoom are probably here to stay. In the next 15 minutes or so, I would like to share with you my views, the insurance industry, what the future beholds. As I've spent more than 3 decades in the insurance industry, I'll try and put my views across, especially on the life insurance industry. It's not going forward? Yeah, it's done. Looking at the evolution of the life insurance industry in India, 245 companies were amalgamated in the year 1956 to form the Life Insurance Corporation of India. The sector opened up in the year 2000 for private players. The FDI limit was raised from 49 to 74% in the year 2021, and now the listing of LIC in the market. It has been a truly momentous journey for India's life insurance industry. But I believe that we are at a pivotal point in India's life insurance journey. Historically, we Indians have a savings-first mentality. Insurance is seen as a cost or an unnecessary outflow and was best put off or avoided altogether. We largely stayed in joint families, and the financial shock would be absorbed by close members of the extended family. Our cultural nuances are such that talk of death is best avoided, and any topic of mortality is subtly avoided by us. However, a lot of these factors are changing. The urban household is now increasingly a nuclear family. Financial inclusion has gone up sharply as well. In the year 2011, only around 30% of adult Indians had bank accounts. In the year 2017, it has gone up to 80%. But even with all this financial inclusion, I think we heard the chairman of LIC speak. He said that the protection gap is very high in India, and it is at 83%. But then came the COVID waves in 2021, which has upended traditional business models and has significantly impacted many sectors. I think all of you know the hospitality industry, the airlines industry. A lot of people had problems during the COVID. Traditional insurance industry business models were also affected by the pandemic disruption. But a silver lining to the pandemic has been how it has forced change towards digital ways of working and towards electronically enabled commerce. COVID thus has been an inflection of sorts for business to customer interactions, forcing business to reevaluate the go-to-market strategy and customer acquisition process. LIC has historically a very heavy agent distribution structure. Almost 95% of the business comes in from the agents. It was difficult to pivot to online first, no-touch customer acquisition. I was in charge of South Central Zone during this period when the COVID wave came, the first and the second wave. It was very difficult to do business, but more than that, it was our responsibility to ensure that all of the employees and the frontline workers were safe. Even then, we had a few deaths. All these lead me to believe that we live in very interesting times as I speak with you today. I believe that there are three powerful forces or control factors that will transform the insurance industry. They are technology, the increased uncertainty, and the new age customer or the millennials. Technology. Over the past decade, we have seen so much of technological changes. The proliferation of startups have transformed all aspects of the financial landscape, from payments to lending and banking. The insurtech wave has been slowly gaining momentum. And over the next decade, I'm sure that we would see accelerated technology-led transformation of the insurance industry. The second is the uncertainty that the world is we are in an increasingly uncertain world as we slowly emerge from a global pandemic and are witnessing a world with increased political tensions and confrontations, and even climatic change. These developments have brought people face to face with their own mortality and the change from a VUCA world to a BANI world. BANI is the latest management term to describe the new post-COVID era: brittle, anxious, non-linear, and incomprehensible. This is the new management jargon that is used to describe the COVID era. The customer of today is very different from previous generations, characterized by higher levels of financial literacy, growing affluence, and preference for personalized digital experiences. The insurance companies of today would need to evolve to delight the customers of tomorrow or risk facing imminent disruption. This is more so in the Indian context due to the fast-growing demographic shift in India. Having seen the main three facets, now let us look at what will happen to the transformation in the future and talk about the interactions with these shaping forces. These three main facets of the insurance industry, in my opinion, are the opportunity, the second is the distribution, the third is the product and the underwriting. Let us look at the opportunity. India is the 10th largest life insurance market in the world by total life insurance premium. The insurance penetration for life insurance is at 3%, which is the lowest among its peers. The term insurance penetration is often confused. Penetration denotes the ratio of life insurance premium collected in a year to the GDP of that country expressed as a ratio. It is not a percentage of people covered, but certainly it's an indicator. The new business premium is expected to grow at a CAGR of 17% in the next 5 years. This is the result of the interaction of many positive tailwinds. First and foremost, we have the changing mindset. The Indian customer is increasingly seeing insurance more as a protection product as opposed to investment product. I think all of you here would know that earlier people used to invest in insurance policies and say, like, how much of return I'm going to get on the money that I've invested. But now that concept is slowly changing. People are looking at more as a protection product. It pains me to say that over the 5.7 lakh Indians who lost their lives, only 12% were insured. And the average claim that was paid was around 3 to 4 lakhs, which is barely sufficient for the family to tide over the death of a beloved one. As per a report published by the Swiss Re, India's protection gap is at 83%. Chairperson sir also had explained that a person, if he is eligible for an insurance of 100 rupees, he takes an insurance policy of 17 rupees. So there's a gap of 83 rupees. That 83% is the gap, protection gap that we are talking about. This protection gap reflects the poor penetration of insurance products and insufficient cover for the people who own the insurance cover. It's a big problem for a country like ours, and also it's a big opportunity for the insurers. They can close in on the protection gap. It is a big priority for the government, as in the long run, it leads to faster economic growth and leads to lower social costs to the taxpayer. Talking of the next opportunity, we have the India growth story. In terms of GDP, on a purchasing power parity basis, India is ranked third with purchasing power parity, adjusted GDP size equivalent to US $9 trillion. And yet the Indian economy is one of the fastest growing economies in the world. Further, India is at the cusp of realizing an incredible demographic dividend, with 12 million people being added to the working population every year. A workforce growing both in size and affluence would translate to growing insurance premiums. By 2030, the rise of the middle class and millennials and more urbanization is a big transformation that I foresee. Lastly, there are government initiatives. A third growth driver is the government initiatives. We all know the government has launched the PMJJBY scheme, the PM SIM for the workers, pension schemes. This will also boost the insurance industry. Increase the FDI limit. Right now it's at 74%. So while the opportunity is large, the next question that faces the insurers is the how. How should insurers change their playbook to make the most of the market opportunity in front of them? The next facet will be this significantly transformed the distribution channel. The insurance companies will have to adopt a strong direct-to-customer sales strategy underscored by rapid digitization and the adoption of technology. While this journey is underway in the insurance industry, there is still a long way ahead. Millennials are for most part digital natives, and they would like to to go to an insurance company which helps them access information and purchase policies with the device of their choice at the comfort of their home. Companies will need to have digital platforms which eliminate the need for paper-based processes and human intervention. I think all of us know the agent, but the agent should be revitalized. We should have a revitalized agent strategy. Despite digital marketing gaining prominence, there is still a need for expert advice and guidance and agent-based distribution system. Insurance is a push product. I think all of you will agree with me present here that you have not taken your insurance policy voluntarily. It would have been after the agent came and visited you 3-4 times when you decided to take the insurance policy. Of course, now youngsters, millennials are more aware of it and they take a term insurance product. But by and large, insurance policy is a push product and it's the agent's advice that helps a person take a product. So what I feel is, even though we are going more into digitization, the need of the agent is there. And in LIC, more than 95% of the premium is brought in by the agent. But the agents will have to change. They'll have to be equipped with CRM tools, which will help them effectively source customer leads and drive customer conversion and retention. Powered by artificial intelligence, analytically driven sales prompts and nudges would help them provide effective advice and make the most appealing offers tailored to the customer's needs. By adopting a bionic sales force strategy, companies would effectively combine the analytical rigor of AI with the empathy and human touch of an agent. A third important pillar is effective partnership. As you may know, bank insurance is a very valuable partnership with the life insurance. A lot of banks have launched their insurance companies. I think all of you know, the HDFC, the SBI, the ICICI, all of them have launched their insurance companies. So this is because people have a lot of faith in their banks, which provides them the comfort to purchase insurance through the bank insurance channel. However, I think a few earlier speakers had said, today's customer walks less into a branch. And bank functions are increasingly replaced by digital fintech. As these players gain the trust of their customers and deepen relationship, these digital-first platforms would also become valuable partners to life insurance. So now we have identified the other two channels. Now the third important thing is product and underwriting. We have seen the opportunity, the distribution channels. The question remains, what are you planning to sell to the market? How will insurance product and the underwriting process involved change as we glide into the future? Once again, the forces of the evolving customer and the technology combine to alter the landscape significantly. Here, I'd like to talk about the three themes, that is the product innovation, personalization, and rise of accelerator and continuous underwriting. As our target market increasingly sees life insurance as a protection product, the share of protection term insurance would account for a higher proportion of life insurance's AUM. India's low penetration of retirement coverage, more than 82% of the people in India work in the unorganized sector. And with the mortality increasing, like the people are living to be very old due to the advancements in medical science, annuity is a very strong product which will sell in the future. The second is the rise of personalization. We live in a world where we have increasingly better data on our customer segments, and insurance customers surveyed across global markets are often very happy to share data with their insurance providers if it helps them receive better rates and benefits. The customers of tomorrow demand a personalized experience where the insurance platform considers all their financial needs and capacity and recommends a product that is most suited to their life stage and protection needs. It is very important to have a customer-centric approach for the development of new products. which are also flexible. Lastly is the rise of accelerated underwriting, continuous underwriting. Today, depending on the extent of coverage, life insurance products can require various medical reports, moral hazard reports. However, as insurers can get access to rich quality data of their customers, there will be efficient ways of underwriting that will emerge that will increasingly rely more on data. It will be so simple for an agent to for a customer, if he shares his health insurance data with the insurer, to just fill up a form and the insurance company will be able to give him a policy. It will be a very exciting experience for the customer to take a policy, and for the insurance company also, which would have all the data. To enable this, insurance providers must develop a lean modular architecture that can effectively integrate data from other sources to inform its underwriting process and the in-house capability, and know how to extract the data through data analysis. With the emergence of wearables, customers can choose to share their activity with insurers, which would facilitate rewards for good upkeep. I think the smartphone, if they share the data on the smartphone, all their heart rate, the blood pressure, all these recordings can be given to the insurer, which will help the insurer to underwrite a policy much faster. As we gaze into the future, there are definitely very exciting times for the life insurance industry. I have briefly touched upon all these factors: the technology, the uncertainty, and the increased segment of millennials. Then we saw the three major facets of the future insurance industry which will actively engage with these determining factors: the evolving market opportunity, improved distribution channels, and thirdly, the innovative products. All this should definitely be accompanied by the right policy decisions to incentivize both the industry and also the employers to adopt insurance as a social benefit. One thing is for certain: the life insurance providers of tomorrow must wholeheartedly embrace technology and place the customer at their center of decision-making process. Otherwise, insurance business risks obsolescence. I once again thank the organizers for giving me this opportunity. Thank you, and all the very best. Yeah.
I request our chief editor to come back on stage to present a memento to our keynote speaker. Kerala is really proud of you, Mini Ma'am. And thank you for brilliantly capturing the possibilities of the insurance industry in India. Thank you once again. Before we move into the grand finale at Dhanam BFSI Summit 2022, we are going to present to you one more musical segment here on stage. And this time we are having a full audience here. The last two times Abhijit and Sandeep were on stage, we were all busy with other stuff. So for 10 minutes, you are going to get complete attention from them.
So you can also join?
Of course. I am also here and I will also join.
I want them to join also.
Yes. കഴിഞ്ഞ രണ്ട് പ്രാവശ്യവും അഭിജിത്തും സന്ദീപും സ്റ്റേജിൽ വന്നപ്പോൾ നമ്മൾ ചായ കുടിക്കാനും മറ്റു പല കാര്യങ്ങളൊക്കെ ആയിട്ട് ബിസി ആയിരുന്നു. അപ്പോൾ ഇത്തവണ നമ്മൾ പൂർണ്ണമായും ഇവിടെ ഉണ്ട്. And he wants to ensure that we participate in his music performance, and I'm going to help you with that. Let's see what he has in store for us.
Start.
Okay, so Abhijit എന്നോട് ഗെയിം പ്ലാൻ ഡിസ്കസ് ചെയ്യായിരുന്നു. സോ വാട്ട് ഹി വാണ്ട്സ് ടു ഡു ഇസ് നമുക്കെല്ലാം പരിചിതമായിട്ടുള്ള ഫെമിലിയർ ആയിട്ടുള്ള പാട്ടുകളുടെ ഏതെങ്കിലും ഒരു പോർഷൻ വായിക്കും. ചിലപ്പോൾ അനുപല്ലവി ആയിരിക്കും, ചിലപ്പോൾ നമുക്ക് പെട്ടെന്ന് മനസ്സിലാവുന്ന ഒരു മ്യൂസിക്കൽ ഇൻ്റർലൂഡ് ആയിരിക്കും. ആൻഡ് whoever gets to identify it first, please raise your hands. നമ്മൾ Q&A സെഷനിൽ കൈപൊക്കുന്ന പോലെ തന്നെ പാട്ട് ഐഡൻറ്റിഫൈ ചെയ്യാൻ ഒന്ന് കൈപൊക്കുക. I'll come near you with the microphone and പറ്റുമെങ്കിൽ പാടി ആൻസർ ചെയ്യുക. That's what we are looking for. അഭിജിത്ത് പുതിയ പ്ലാൻസ് ഡിവൈസ് ചെയ്തുകൊണ്ടിരിക്കുക. നിങ്ങളുടെ എനർജി ലെവൽ അനുസരിച്ച് വേണമെങ്കിൽ 2 ടീമായിട്ട് തിരിച്ച് ഇതൊരു മത്സരമാക്കി നടത്താം, കാവിലെ പാട്ട് മത്സരം നടത്താമെന്നാണ് അഭിജിത്ത് പറഞ്ഞത്. ബട്ട് ലെറ്റ്സ് ഗെറ്റ് സ്റ്റാർട്ടഡ് വിത്ത് 1 ആൻഡ് സീ വെയർ ഇറ്റ് ഗോസ്.
എല്ലാവരും ഇൻട്രസ്റ്റഡ് ആണോ? കുറച്ച് ഒരു ശബ്ദമൊക്കെ ആകാം. ആണോ? ഓക്കെ.
ഇനി ബാക്കി സംഗീതം കേട്ട് കഴിയുമ്പോൾ എനർജി വരും.
ചിന്ന ചിന്ന ആശൈ ചിന്ന ചിന്ന ആശൈ പാടാൻ അറിയില്ല. ചിന്ന ചിന്ന ആശൈ.
കലക്കി. സാറിന്റെ പേരൊന്ന് പറയും.
I am Venkatachalam, representing Canada Robeco.
ഫാബുലസ്. പാടാൻ അറിയില്ലെന്ന് അഡ്മിറ്റ് ചെയ്തുകൊണ്ടാണെങ്കിലും കൂടെ ഗമഗമിട്ട് പാടി ആ സ്റ്റൈൽ ഞങ്ങൾക്ക് ഇഷ്ടപ്പെട്ടു. താങ്ക് യു സോ മച്ച്. പക്ഷെ പാട്ട് കറക്റ്റായിട്ട് ഐഡൻറ്റിഫൈ ചെയ്തല്ലോ, അപ്പോൾ സിനിമ പാട്ടൊക്കെ അറിയാം. ഒന്നുകൂടെ വലിയൊരു റൗണ്ട് ഓഫ് അപ്ലോസ് ഫോർ ഹിം പ്ലീസ്. അഭിജിത്ത്, നമ്മുടെ ഓഡിയൻസിൻ്റെ കഴിവിനെ അണ്ടർ എസ്റ്റിമേറ്റ് ചെയ്യാണ്. ഇത്രയും സിമ്പിളായിട്ടുള്ള ചോദ്യമൊന്നും പറ്റില്ല, കുറച്ചുകൂടെ കോംപ്ലക്സിറ്റി ലെവൽ കൂട്ടണം. ഓക്കെ കയറി വരികയാണ്. ഫൈൻ.
Uttara Ramakrishnan.
Uttara Ramakrishnan ma'am, beautifully sung for us. Vidyasagarന്റെ amazing composition from Azhage Ravanan. Okay, കാവിലെ പാട്ട് മത്സരം നടത്തേണ്ടി വരുമെന്ന് തോന്നുന്നതാണ് അഭിജിത്ത് പറഞ്ഞത്. കാരണം കൃത്യമായിട്ട് ആ സൈഡിൽ നിന്നും ഈ സൈഡിൽ നിന്നും ഓരോരുത്തർ വീതം പറഞ്ഞിരിക്കുകയാണ്. ലെറ്റ്സ് സീ വെയർ ദിസ് ഗോസ്. ഇനി ഒരെണ്ണം കൂടി നോക്കാം, എവിടെ നിന്നാണ് ഐഡൻറ്റിഫൈ ചെയ്യുന്നത്. ഞാൻ ഇപ്പുറത്ത് പോയി നിന്നാലേ കാണുള്ളൂ ആരാ കൈവെക്കുന്നത്. ഓക്കെ, ഗോ ഹെഡ്. തമിഴ്, റെഡി ഫോർ തമിഴ്? യെസ്.
അഞ്ജലി. അഞ്ജലിക്ക് ഈ കയ്യടി പോരാ. കമലഹാസൻ പാടിയ പാട്ട് she beautifully recreated here. Thank you so much, Anjali. I really wish I had a gift to give to you, പക്ഷേ കല സ്നേഹം മാത്രമേ ഉള്ളൂ. അത് ഉത്തരം കറക്റ്റായിട്ട് പറഞ്ഞതിന് അഞ്ജലിക്കുള്ള ഗിഫ്റ്റ് ആയിരുന്നു മാം, അത് ചോദ്യമല്ലായിരുന്നു. സോറി, അവിടെ ഒരു കൈ പൊങ്ങി. ഇത് കോംപ്ലക്സിറ്റി ലെവൽ കറക്റ്റ് ആയിരുന്നു. അതുകൊണ്ട് കറക്റ്റ് അറിയാവുന്ന ഒരാളാണ് കൈ പൊക്കി പറഞ്ഞത്. കട്ടയ്ക്കുള്ള മത്സരമാണ്. ഒരു തമിഴ് പാട്ടും കൂടിയുണ്ട്. ടീം ബി റെഡിയാണോ? പിടിച്ച് നിൽക്കോ? ടൈ ബ്രേക്കറിലേക്ക് നമ്മൾ പോവോ? ലെറ്റ്സ് സീ. അത് ഭയങ്കര എളുപ്പമായി പോയി. ഒരുപാട് കൈ പോരും.
My name is Priya Shivadas. I would like to give a song to George Alexander, sir, who's my boss, I think 10 years back. Thank you so much.
ഒരു സോങ് ഡെഡിക്കേഷൻ പറഞ്ഞു. ആൻഡ് യുവർ ശ്രുതി വാസ് ലൈക്ക് പെർഫെക്റ്റ്. താങ്ക് യു ഫോർ ദാറ്റ് ഫാബുലസ് പെർഫോമൻസ്. എങ്ങനെയാ ടൈ ബ്രേക്കറായി? അഭിജിത്തിനല്ലായിരുന്നോ മത്സരം നടത്തണമെന്ന്? ആണോ? പഠിപ്പിച്ചത് ജോർജ് അലക്സാണ്ടർ സാർ ആണെന്നാണ്. ഇപ്പൊ സാറിന് വേണ്ടിയിട്ട് ഒരു സ്പെസിഫിക് ക്വസ്റ്റ്യൻ. ഹിന്ദി ഇതിന് ഉത്തരം പറയാനുള്ള ആദ്യത്തെ അവസരം ജോർജ് അലക്സാണ്ടർ സാറിന്. സാറിന് പഴയ സോങ് അപ്പോൾ സാറിന് അറിയില്ലെങ്കിൽ മാത്രം നമ്മൾ പാസ് ഓൺ ചെയ്യുള്ളൂ കേട്ടോ. ഓക്കെ, ലെറ്റ്സ് സീ. ഞാനും പെട്ടു, എനിക്കും അറിഞ്ഞൂടാ. സാറിന് പറയാൻ അവസരം കൊടുക്കാതെ മാം പറഞ്ഞു കഴിഞ്ഞു. പക്ഷെ സാറ് പാട്ട് പാടുമോ ചെറുതായിട്ടെങ്കിലും? ഈ പാട്ട് സാറിന് അറിയാം, സാറിൻ്റെ മുഖം കണ്ടറിയാം. പറഞ്ഞു, പക്ഷെ സാറിന് ഒരു വരി ഒന്ന് പാടാൻ സ്കോപ്പ് ഉണ്ടോ? പ്ലീസ്. ഓഡിയൻസിൻ്റെ പോപ്പുലർ സാർ എന്നെ ബുദ്ധിമുട്ടിക്കരുതെന്ന് സാർ കൈ. സാറിന് ഇപ്പോൾ ഒരു മനസ്സുണ്ടെന്നാണ് എനിക്ക് തോന്നുന്നത്. ഒരു സന്തോഷം
പ്രസംഗമായിട്ട് പറയാം.
മതി. സാറിന് വരി അറിയാം അപ്പോൾ പാട്ടിൻ്റെ. ലെറ്റ്സ് സീ, ഒരു ലൈൻ. ഓക്കെ, സാറിന് വേണ്ടി ദേ ഇവിടെ ഒരു ടീം തന്നെ പാടാൻ റെഡി.
एक प्यार का नगमा है, मौजों की रवानी है, जिंदगी और कुछ भी नहीं, तेरी मेरी कहानी है। एक प्यार का नगमा है, मौजों की रवानी है, जिंदगी और कुछ भी नहीं, तेरी मेरी कहानी है। एक प्यार का नगमा है. Thank you.
ഈ ചോദ്യം നമ്മൾ ജോർജ് സാറിന് വേണ്ടി മാത്രം കൊടുത്തുകൊണ്ട് തന്നെ ഇതൊരു ടൈ ബ്രേക്കറിൻ്റെ ഇഫക്റ്റ് ഉണ്ടായില്ല. അപ്പോൾ ഒരു പാട്ട്, ഒരു പ്രോപ്പർ ടൈ ബ്രേക്കർ സോങ്, കുറച്ചൊരു റിഥം വരുന്ന പാട്ട്, സോ ദാറ്റ് ദേ കൻ ക്ലാപ്പ് ആൻഡ് ജോയിൻ അലോങ്. വാട്ട് ഡു യു തിങ്ക്? ഏത് ഭാഷ വേണമെങ്കിലും അഭിജിത്ത് ചൂസ് ചെയ്തോളൂ. കുറച്ച് ചെറിയ റിഥം, കൈയടിച്ച് ഇവർക്കൊന്ന് കൂടാൻ പറ്റുന്ന പാട്ട്. സ്പെഷ്യൽ റിക്വസ്റ്റ് ആണ്. അപ്പോൾ പ്ലീസ് വിത്ത് ക്ലാപ്സ് ജോയിൻ ഇൻ ദ റിഥം ഓഫ് ദ സോങ്. പുഷ്പ. മാം ഏറ്റവും അൾട്രാ മോഡേൺ പാട്ടാണ് ചോദിച്ചേ, ലേറ്റസ്റ്റ് ഏതാ ഇഷ്ടമുള്ളത്? പോരട്ടെ. ശ്രീവള്ളിയുടെ ഭാഷ. ക്ലൂ ശ്രീവള്ളിയുടെ ഭാഷ തന്നെയാണ്. അവിടെ വരെ എത്തി നമ്മൾ. യെസ്, ഉത്തര മാം വിടുന്ന ലക്ഷണമില്ല. അപ്പോൾ ഐ തിങ്ക് വി ഹാവ് എ ക്ലിയർ വിന്നർ ഹിയർ. മാം 4 ചോദ്യത്തിന് മാം കൈ പൊക്കി കഴിഞ്ഞു ആൻഡ് ഷീ ന്യൂ ദി ആൻസർ ഫോർ ഓൾ ഓഫ് ദെം. അല്ലല്ല, no, we absolutely love your enthusiasm. So I think we have a winner here and we are going to do this final victory song from Uttara ma'am. നമുക്ക് ആർക്കും അറിയില്ല, അപ്പോൾ എന്ത് വേണമെങ്കിൽ പഠിക്കും, ഒന്നും പ്രശ്നമില്ല. അർത്ഥം ആർക്കും അറിഞ്ഞുകൂടില്ല, അപ്പോൾ ഒരു വിഷയമില്ല. ഓക്കെ, മാമിനെ ധനം പബ്ലിക്കേഷൻസിന് നമ്മുടെ ഈവൻസിലെ ആസ്ഥാന ഗായികയായിട്ട് ഇതോടുകൂടി പ്രഖ്യാപിക്കുകയാണ്. മാമിൻ്റെ സിനിമ ഗാന മേഖലയിലുള്ള അവഗാഹം അതിനെ നമ്മൾ ഒരുപാട് സ്നേഹത്തോടെ ആദരവോടെ അക്നോളജ് ചെയ്യുന്നു. ആൻഡ് വിത്ത് ദാറ്റ് നമുക്ക് ഈ ഇച്ചിരൂടെ ചോദിക്കണം എന്നുണ്ടെങ്കിൽ ഐ എം റിയലി ലൈക്കിംഗ് ദിസ്. മരിയ മാം നിർത്താൻ പറയുന്നവരെ വി വുഡ് ഗോ ഓൺ. സർ, എന്താണ്, ഒരു ചോദ്യത്തിനുള്ള സമയമുണ്ടോ? ഓക്കെ, സിൻസ് വി ഓൾസോ ഹാവ് എ വിന്നർ, I guess it's for the next evening. അപ്പോൾ എല്ലാവർക്കും അഭിജിത്തിൻ്റെ പെർഫോമൻസ് ഇഷ്ടമായെങ്കിൽ നല്ലോണം ഉത്തരം ഒന്ന് കൊടുത്തേ.
എല്ലാവർക്കും ഇഷ്ടപ്പെട്ടെന്ന് കരുതുന്നു. ഞാൻ എൻ്റെ കൂടെയുള്ള സന്ദീപിനെ കൂടെ ഒന്ന് ഇൻട്രൊഡ്യൂസ് ചെയ്യട്ടെ. സന്ദീപ് മോഹൻ, ഗിറ്റാറിസ്റ്റ്. സന്ദീപ്, നിങ്ങൾ സന്ദീപിൻ്റെ സോങ്സ് ഒക്കെ കേട്ടിട്ടുണ്ടാവും. ഇപ്പോൾ ലാസ്റ്റ് ഭീഷ്മപർവത്തിലെ സോങ്ങൊക്കെ സന്ദീപാണ് വായിച്ചത്. എനിക്ക് തോന്നുന്നു ഓൾമോസ്റ്റ് ഓൾ എല്ലാ മ്യൂസിക് ഡയറക്ടേഴ്സിനും ഇപ്പോൾ സന്ദീപാണ് മലയാളത്തിൽ വായിക്കുന്നത്. ഗോപി സുന്ദർ, ബിജി പാൽ, ദീപക് ദേവ്, എല്ലാവർക്കും. അപ്പോൾ സന്ദീപിനും താങ്ക്സ്. നിങ്ങൾക്ക് ഇഷ്ടപ്പെട്ടെന്ന് കരുതുന്നു. താങ്ക് യു.
അഭിജിത്ത്, ഒരു ഫിനാലെ 1 minute ക്വിക്ക് പെർഫോമൻസ് രണ്ടുപേരും കൂടി ചെയ്യുന്നോ? വി വുഡ് ലവ് ദാറ്റ്. യെസ് പ്ലീസ്. ചോദ്യം ഉത്തരവൊന്നുമില്ല, ഓൾ യോസ്, സ്റ്റേജ് ഇസ് ഓൾ യോസ്. രഥമുള്ള പാട്ട് വായിക്കാൻ പറഞ്ഞപ്പോൾ അഭിജിത്ത് ചമ്മി നിന്നത് എന്തിനായിരുന്നു? ഗ്രാൻഡ് ഫിനാലേക്ക് വേണ്ടിയിട്ടെല്ലാം ഒളിപ്പിച്ച് വെച്ചിരിക്കുകയായിരുന്നു അല്ലേ, പുറത്തെടുക്കാൻ. താങ്ക് യു സോ മച്ച് അഭിജിത്ത് ആൻഡ് സന്ദീപ് ഫോർ ദാറ്റ് fabulous entertainment that you gave us. The audience is absolutely up to the energy level that's required for the next cool conversation that we are going to have on stage. But before that, we are going to show you some audio visuals on the screen. Let's take a look.
ഇല്ല മാഡം, 3-4 ദിവസം. അടുത്ത ആഴ്ച തീർച്ചയായും.
അടുത്ത ആഴ്ചയോ?
മാഡത്തിന് ലോൺ വേണമോ? മുത്തൂറ്റ് ഫൈനാൻസ് ലോൺ ആൻഡ് ഹോം സർവീസിലേക്ക് വിളിക്കൂ. ഉടൻ ഗോൾഡ് ലോൺ നേടൂ വീട്ടിലിരുന്നു കൊണ്ട്. വിളിക്കൂ 1-800-202-1212 എന്നിട്ട് ജീവിതത്തിൽ മുന്നേറുക. സൂപ്പർ ടേസ്റ്റ്.
ചേട്ടാ കാഫേ.
ആ വിവേക്, താങ്കൾ ഒരു കാഫേ തുടങ്ങിക്കോളൂ, നന്നായി നടക്കും.
ഇപ്പൊ എന്ത് പറയുന്നു വി പി സർ?
ഓക്കേ, ലെറ്റ്സ് ഡു ഇറ്റ്.
കാഫേക്ക് വേണ്ടി ഫണ്ടിംഗ് വേണ്ട, ഫൈനാൻസ് അറേഞ്ച്.
അതൊക്കെ ഉണ്ട്, FDs ഉണ്ട്, മ്യൂച്വൽ ഫണ്ട്സ് ഉണ്ട്.
കഷ്ടപ്പെട്ട് സമ്പാദിച്ചത് എന്തിനെടുക്കുന്നത്?
അപ്പൊ എന്താ ചെയ്യാ?
വീട്ടിൽ വെച്ചിരിക്കുന്ന ഉറങ്ങുന്ന അസറ്റിന് സമ്പാദിക്കാൻ വിട്.
ഗോൾഡ് ലോൺ.
പക്ഷേ ഗോൾഡ് ലോൺ
നിങ്ങളുടെ സേവിങ്സും ആവും, നിങ്ങളുടെ ബിസിനസ്സും നടക്കും.
കേട്ടില്ലേ?
അവിടുന്ന് ഇവിടുന്നല്ല, മുത്തൂറ്റ് ഫൈനാൻസ് ഗോൾഡ് ലോൺ മാത്രം എടുക്കും. കുറഞ്ഞ പലിശ, മാക്സിമം ലോൺ തുക, നേരിട്ട് പണം കയ്യിൽ ലഭിക്കും, ഓൺലൈൻ സൗകര്യവുമുണ്ട്.
സോ കൺവീനിയന്റ്.
ഇവരെ പോലെ നിങ്ങളുടെ സന്തോഷങ്ങൾക്കായി സ്വയം ഫൈനാൻസ് ചെയ്യും. മുത്തൂറ്റ് ഫൈനാൻസിൽ നിന്നും ഗോൾഡ് ലോൺ എടുക്കും,
ജീവിതത്തിൽ മുന്നേറും. 9946901212 കോൾ ചെയ്യൂ.
പ്രിയ, നീ ചെയ്യുന്നതും ഞാൻ ചെയ്യുന്നതും ഒരേ ബിസിനസ്, രണ്ടുപേർക്കും ബുട്ടീക്ക്. പക്ഷെ നീ എപ്പോഴും ബിസിനസ് ക്ലാസ്സിൽ ഫ്ലൈ ചെയ്യുന്നു, ഞാൻ എക്കോണമി ക്ലാസ്സിലും. മോളെ ഞാൻ സ്ട്രെയിറ്റ് ആയിട്ട് ചോദിക്കുക, ഈ എക്കോണമി ക്ലാസ്സിൽ നിന്ന് ബിസിനസ് ക്ലാസ്സിലേക്ക് കയറാൻ ഞാൻ എന്നതാണ് ചെയ്യണ്ടേ?
ധനം വായിക്കുന്നത് ഒരു ശീലാക്കിയാൽ മതി, ബാക്കിയെല്ലാം ഓട്ടോമാറ്റിക്കലി ശരിയായിക്കോളും.
ധനം ബിസിനസ് ലോകത്ത് അറിയേണ്ടതെല്ലാം.
എന്നിട്ട് ടീച്ചർ ലക്ഷ്യം എന്താന്ന് ചോദിച്ചപ്പോ നീ എന്ത് പറഞ്ഞു?
അച്ഛന് വിൽക്കേണ്ടി വന്ന നമ്മുടെ വീടും സ്ഥലമൊക്കെ ഞാൻ തിരിച്ചു പിടിക്കുമെന്ന്.
കുട്ടി പഠിച്ച് വലിയ ഡോക്ടറോ എഞ്ചിനീയറോ ഒക്കെ ആവ്, പോയതൊക്കെ നമുക്ക് തിരിച്ചു പിടിക്കാം.
എനിക്ക് വലിയൊരു ബിസിനസ്സുകാരനായാൽ മതി മുത്തശ്ശി.
അതിന് ബിസിനസ് എന്താണെന്ന് പഠിക്കണ്ടേ വിഷ്ണു?
പഠിക്കാൻ തുടങ്ങിയില്ലോ. പിന്നെ എന്തിനാ അമ്മേ മുടങ്ങാതെ ഞാനിത് വായിക്കുന്നത്?
ധനം ബിസിനസ് ലോകത്ത് അറിയേണ്ടതെല്ലാം.
Thank you for your kind attention. And before we move into the grand finale, once again remembering with gratitude our presenting sponsor, Muthoot Finance, and our silver sponsors, Manappuram Finance, ESAF Small Finance Bank, Reliant Credits, Niravath Jubilee Chits, Kerala Bank, DBFS, and our OOH media partner, Aishwarya. Like I mentioned, the audience is set at the energy level for the next conversation that's going to be unfolding on the stage. And this fireside chat is going to be a conversation between a senior and a junior. And this senior in question is a cool value investor who relentlessly asks investors to stay calm and not worry at all, even when major global crisis, unravels. And he is an investor who discovers hidden gems, that is companies with great strength and potential, to unveil to the world and create success stories, great success stories. The emperor of small caps and also the emperor of the share market Twitter, we are really proud to present to you again on a fireside chat platform, Mr. Porinju Vilayat, founder and CEO of Equity Intelligence. And in conversation with him is the junior who was here on stage with us earlier during the day, Sharik Shamsuddin. Proud to present both the gentlemen to you. Welcome to the stage. Can we have 2 microphones for the gentlemen? Yes.
We hope to have an energetic Q&A at the end of this as well, but then I hand it over to Sharik to take it over.
Yeah, good evening, everybody. Good evening, sir. Right. Good evening. Yep. I mean, it was such an amazing event which led to this, so absolutely thrilled again to be on the stage with the man himself, right? Again, I've been given a very difficult job of introducing him, right? Again, rightly called as the small cap czar. The Perm Bull by Economic Times, right? So who doesn't know him? Again, personally, we have had this conversation before, but I've always looked up to you as a person who inspired a generation in the small state called Kerala, right? To come into the world of stock market. So thank you very much for inspiring me and inspiring a lot of us who are sitting here, right? So thank you very much for that to begin with. And yeah, welcome.
Thank you. Am I audible?
You know, when I was given this responsibility to do this today, right, I was looking into a few numbers, and I found out that after your probable 10 years of stint in Mumbai, you came back to Kerala at around 1999, and he started Equity Intelligence at 2002. So it's 20 years of successful equity intelligence, if you did not know. So absolute large applause to him for that, right? So. Yeah, so again, I would like to keep things a bit casual before we start talking about the markets, right? So I actually went a bit deep and I read what you wrote to your investors a few weeks before. So when you wrote that, you've written, equity intelligence has always been inspired by two classic traditions. First of value investing and second that of Kerala's own ancient martial art, Kalaripayattu. That's what he wrote to his investors. So, and again, we all know you to be an organic farmer, right? So what is behind that?
I think this Kalaripayattu is something I don't know where you got it from.
Yeah, you wrote it to your investors, I guess.
Okay,
yeah,
you got a copy.
Yeah.
So this is a theme we are trying to make along with our logo. We are redesigning our logo and relaunching our services.
Mm-hmm.
So Kalaripayattu is our own Kerala kind of a martial art, which requires tremendous amount of focus and the talent.
Yep.
So these two elements are going to be the martial art. Kalaripayattu represents these two elements, and in equity investing, the same kind of this is very relevant. The kind of focus required, without getting into small current affairs, as the earlier speaker was talking about. We have to be fully focused, and those aspects of Kalaripayattu is relevant to equity investing,
right,
especially in value investing.
Mm-hmm.
So that's why we are going. I have a small issue. It's coming straight to my eyes. 1 second. Can I tilt a bit? So we have the same thing. Can this be reduced a bit or something?
Right, I get it now. The point of focus when it comes to investing and being in the market is what you're trying to convey by bringing in Kalaripayattu to the equation.
Yeah.
Absolutely. Now let's start talking markets. I hope that's what everyone's waiting for. I also understand there's a huge online audience watching, so definitely let's get into the market. So a lot has been happening in the market over the last 5 years, I'd say. Even 16, 17, 18 again with NBFC stuff happening. 2020 with Corona, and again 2022 hasn't been great as well, right? So what are you still doing? Still mid-cap, small caps, or any change in plans?
We are not confined to any particular class of stocks, but generally, we end up in small and mid caps all the last, since 2003 when we started the operations of PMS. This is, our style of investing, our strategy. We end up in that space. Not that we are averse to large caps. We had times when we invested in Reliance Industries.
Yep.
And many other larger companies, and currently also we have a couple of large cap companies. So it's not that we invest only in them, but predominantly we invest in small and mid caps. So the idea is, India, the structure of Indian economy, it gives a lot of opportunity for emerging businesses. Today is a small cap and which can be a mid-cap and going to a large cap eventually. So even all the large caps what we see today, including Reliance Industries or TCS or Infosys, they had a time it was small micro-cap companies or business which has grown. So that is where the biggest of money is made. And there are different kind of strategies by fund managers. And there, within that strategy, we have cycles. Some of the strategies don't work always. No strategy work all the time. Yep. Now we listen to Saurabh Mukherjee. He has been talking about a very particular strategy. It's fantastic. So it also may not work all the time. True. There will be times when these so-called blue chips can be stagnant for 5 years and 10 years, underperforming the market. So we have seen all those kind of cycles. So no strategy work all the time. It's very important to remember in investing.
Absolutely. And again, this is a personal question I always wanted to ask you. So do you do short-term trading as well? Maybe play a bit around with a derivatives market? Or is it absolutely value investing all the time?
No, see, as a portfolio manager, it has been always value investing for long term.
Right.
And as everybody knows, we had a couple of bad years recently, 2018 and 19. The only 2 years we have underperformed the markets, that also significantly. Otherwise, the earlier 14 years, we had, I think, some 32% CAGR for 14 years.
Yeah, that's amazing.
That was something we took pride. But these 2 years, that underperformance was very severe. We are just coming out of that. Yeah. So the people who invested, the retail and most investors come at the peak of market cycles. Correct. Which is the truth if you see last 30, 40 years. Right. So the maximum money came in that 2017. It's not only the market peak, it was a peak of, our strategy of picking small and mid caps. So it came together and it was a big hit. But say, for example, somebody invested, say, 2 years ago. It has grown by 2-3 times. Right. So, and somebody invested 4 years ago, and we have few accounts still in negative territory, to be frank. Correct. So people feel, I invested 4 years with you, and it did not perform yet. So that is how equity works, and some strategies work. So it is the cycle, market cycles, then the cycles of strategies, and each individual, each fund manager has got their own time.
True. Yeah, that's absolutely there, right? When you are coming into the equity market, you have to come in with the mindset that you should be okay with a few bad years maybe, but it's all, you're investing for the long term, so you'll be getting your fruits at the end of the tenure, right?
I do personally some trading sometimes. I'm a little, have a habit of trading, even in F&O, but not very much nowadays.
Okay, nice. Okay.
But I know you have been a trader and promoting trading.
Yes.
A lot of people may be enjoying it.
Absolutely.
I really appreciate the way you have been, learning it and sharing it with general public. And I think a lot of people, I know your fan followership among traders is one of the highest in India, I would say.
No, as I said, trading hasn't got the kind of importance that it has got, right? It's always been confined in a room, elitist kind of a thing. People think that they cannot do it for themselves, right? I absolutely am against it. I feel if there is right education, people learn it in the right way. Even normal people can start trading. So, yeah. That's that. Anyways, speaking about this year, 2022 has been very choppy so far, right? We opened at around 17,500, went up till 18,600, came down to 15,800, again is up to 17,500 today. So the year has been super choppy, multiple reasons. Inflation rising in the US, record inflations in the US, in UK, 30, 40-year high. Then the war situation which happened, FII selling, relentless FII selling. So what do you think about the remaining of the year? Where do you see the market going in this year and a few years coming up?
See, India is in a sweet spot. Yeah. I think what are happening around, even the short-term challenges and, the geopolitical issues, the China plus, supply chain strategy by the Fortune 500 companies, these all are very important developments. And there may be short-term challenges, could be affecting the growth. But as far as India is concerned, I think it's a fantastic developments for, maybe it is a bit selfish to say India is benefiting from some of the negatives going around, but it is true. India is going to do extremely well. I think the cycle looks like, like 2003 to 2010. We had a fantastic cycle, not only for the market, the economy cycle. Something like that is taking shape, and it has already started.
Right.
And there are all ingredients in place for
Right.
that kind of tremendous growth.
Yeah.
So the broader picture is that, we are now around $2.8 trillion economy.
Exactly. Yep.
So there is like a consensus that we are moving towards a $5 trillion economy by 2025. And definitely the target or the expectation or the estimate is a $10 trillion economy by 2030.
Let's look forward to that.
So
right?
this is indicating 8-9% growth.
Mm-hmm.
It's not a small thing.
Yep.
And our base has grown big.
Right.
So from today's base,
Mm-hmm.
8-9% growth in economy for next 7-8 years. I'm telling you, people are underestimating Indian economy, and that the next decade going forward. We had huge challenges in the last decade. There was no capex. We had huge NPA issues.
Yeah, political instability.
The political instability and
The initial part of the last
yeah,
decade, probably.
that's right.
Yeah.
So things are really looking up. We have all the ingredients to grow at this so-called 8-9%. And at that level, equity investors are going to mint money in the market. There's no doubt about it. So the so-called small disturbances, whether it is geopolitical or the commodity prices going up. Now we may be affected with the crude price staying that high for if it stays for a longer time. But all these challenges, I think India is very strong.
Mm-hmm.
Our balance sheet is very strong.
Yeah.
And we had a time, if you remember, there was no exports.
Yeah.
The 70s and 80s, we hardly had any exports.
Yeah.
I think that is why the 1991 reforms happened.
Right.
I think, if I remember correctly, we had our foreign exchange reserve was just enough for 1 day's crude oil buying.
Okay.
In 91. And we were forced to do the reforms.
Right.
So even though people are giving too much credit for the politicians in those days, we were forced to do that in those days.
Now, speaking about regulations and changes, PLI is something maybe worth mentioning, right? Production-linked incentive schemes across sectors, I guess. Again, that's going to put India on the manufacturing map of the world for sure, right?
Again, large number of investors may be underestimating this PLI scheme.
Absolutely.
It came on the right time.
Yep.
I think we talked about it in 2020, just before the COVID started. So this is creating huge, now, already last week, 10,000 crores worth of iPhone exported from India.
Nice. Yep.
In the first year of operations of a company, the two companies, that Vistra, what you call, the two companies, manufacturing for Apple. So this is just the beginning.
Right.
And we have now, this first time in India, we already crossed $400 billion of exports.
Exactly.
When we had a time, we had, so the foreign exchange reserve is something, strong balance sheet, 40 billion dollars of forex reserves. So when things happening around us like Sri Lanka or kind of many countries, this is an amazing performance by India.
Absolutely.
So all those challenges, including inflation, you have been mentioning.
Yeah, inflation is one concern. So whenever we say, let's not be worried about geopolitical tensions, let's not worry about FII selling, those are all momentary, right? But inflation rising in the US, a country where interest rate is near zero, inflation is at 6%. In a country like UK, it's at 7%, and we are still at 6%. So one is, inflation, there is a concern, and interest rates are going to be increased. 50 basis points increase every other month, as we are looking at a huge interest rate hike in the US. Number two is, inflation, is the Indian numbers actually telling the truth? I'm concerned. I'm looking around and I'm seeing the prices going up everywhere, but our Indian inflation numbers are still at 6%. So, what do you think about that?
See, there is a rising trend of inflation globally.
Yeah.
We have to live with that. This could affect the growth of companies, profitability in that cycle. But this will not be a structural issue for India. As I told, Indian balance sheet is very strong with 40 kind of billion dollars of forex reserves. It's very strong. We are ready to, meet any of these kind of challenges. And so everything, all those ingredients are pointing towards a huge, at least a 10-year cycle for Indian economy and especially the stock markets.
Yeah. So I guess one thing we should all derive from his talk so far is, I mean, whatever I ask him, his focus is only on the long term. I mean, I put him, geopolitical stuff or what's happening in the US, or, I mean, every time the focus is only on the long term, and that's exactly the kind of mindset I think you need to have to succeed in the market, right? Or to only be focused on the long term. And again, when I hear you being so bullish on India Inc., so I think that's why Economic Times call you the perm bull, right? So that's
yeah. This is not only me. You know, all the serious market participants, they are very bullish on India. Looking at these ingredients, not just blindly getting bullish. You know, some people may be getting bullish, being patriotic, but in a stock market investing or economy, we cannot take those kind of views.
Right.
These are based and backed by real fundamentals of India.
Absolutely.
Looking forward.
Yep.
So I think if we talk about $10 trillion economy by 2030,
right, absolutely.
Then that is the view. I think almost all the market participants are coming to this kind of the line of thinking.
Right.
That is one reason for the high valuations of, or the high price earning multiples for Indian stocks or the market in general. And that is going to sustain.
Got it.
And we are, see the profit, the corporate profits to GDP ratio. That ratio was something like 5. In 2018, in 2008, we had a corporate profits to GDP of 5, which has come down to 2 in 2020.
Okay, nice.
From there, we are moving up very fast. So this will go back to 3, 4, and 5 in the next 2-3 years. So that is also going to make a huge, that is the reason for these high price earning multiples for Indian stocks in general. So maybe FIAs are not realizing that.
Right.
And they have taken a view, a lot of them have taken a view that the market is richly priced, or some of them may be feeling there are excesses and overpriced. So that's the reason we have seen something like 1.5 lakh crores of FI selling in the recent
Correct,
past.
that's true.
That's a big number.
Record selling happening.
That's a big number of that, what people believe. I'm telling you, this is not any big number. When we consider India's economy, the structure of Indian economy, now more and more people coming to the stock markets.
Yeah, that's something.
Around 1 lakh crores of money was pumped in by the retail investors in India during the same period.
Yep.
And around 78,000 crores of buying was done, net buying was done by domestic DIS.
Yeah, DIS.
So this 1.5 is not very big, but psychologically people are not accustomed to such large amount of selling. So, I feel the retail participation is not, again, cannot be underestimated. We had 3.6 crore demat accounts in 2019. And now it has gone to 9 crore.
Yeah,
that's a number. So this is a huge surge in the people participating in the markets. But one challenge, all that new money coming in, most of the newbies in the market, they are little not caring for the valuations.
Yeah.
They are going after momentum and fancied sectors and companies in the market. So that may not, but they will learn in the process.
Yeah, that's something I also believe. They have to go through that process, everybody. They have to probably burn their hands, lose some money.
They have been overlooking at valuations.
Yeah.
So that's a very, that's a trend I have been noticing. That's one reason, stocks have been continuously rising 5 times, 10 times, and then come back by half.
Now that you've mentioned about the beginners in the market, probably a lot of them are watching online as well. Maybe we could get into some actionable insights for them. So any specific sectors that you're bullish on, given the fact that we talked about PLI scheme already, PSU sector on the background of privatization happening. So any specific sectors on your mind?
Public sector is very important. This could be a theme for the next 1-2 years. Again, how many PSUs India has?
Yeah.
The public sector companies. Can anybody guess? We have 1,825 PSUs in India.
Yeah.
Some 25-30% of them are not operational. And I think 1/5 of our budget allocation is going to these PSUs. Most of them are bleeding. So we know some of the listed entities which are doing very well. And so I think the privatization of PSUs is in the right direction. We need to come out of this. Mostly the politicians and bureaucrats, the corrupt politicians and bureaucrats benefit out of this. So monetizing them and, leaving it to the private sector makes a lot of sense. They can be run much better. So for stock investors, I feel next 2 years, this is a fantastic theme to invest in or trade or whatever. And within which we have got fantastic companies which will continue to be under the government fold, like the defense companies or electronics like BEL or maybe the HAL. We have wonderful companies. Now LIC is coming into the back. So, and a lot of them will be disinvested. So disinvestment of these companies like BEML or there are Bamal Lorry. There are many small companies are also getting disinvested. Maybe some fertilizer companies like RCF. So I think investors should have a serious look at some of these smaller PSUs which are doing not so great because they are under government management. So once it goes to smart people, maybe Ambani's or Adani's or Vedanta's, Tata's maybe taking, or maybe some MNCs could be coming to India and buying them out. So the fortune of those companies, if it is into any relevant business, they can do very well. They can be multi-baggers. But I don't want to tell any particular names. I think PSUs as a theme is going to do very well for next at least 2 years. But some of those PSUs are irrelevant. Even though you may find them very cheap, maybe the business is not going to be futuristic or it will be difficult to revive. Such companies could be avoided in any case. That's about PSU.
Definitely. And again, speaking about actionable insights, everyone knows that you are a value investor. So any secret mantra or a tip that you would love to give to beginners who are watching online probably?
See, recently I was noticing the IPOs coming in. Those companies are valued much, much higher than the listed companies. And all these new investors were going after the IPOs because they were marketed well. Media have been covering, and so there were vested interest playing behind them. And some operators, we call them jockeys. Some jockeys may be buying it out and taking up the price in a big way. Basically, price manipulation. So all those things are happening around a lot of IPOs. Some of them are fantastic business, not that they are bad companies. But for everything, there is a price. That's the first thing to be remembered by the new investors. A company is very good. They have got a fantastic future. Doesn't mean you can go and buy it at any price. So these price earning multiples are relevant. The net profits are relevant. The projected profits or cash flows, everything is important. You cannot ignore any of these things. And most importantly, in a disruptive world out there, how relevant is the business or the products of those companies? That's the most relevant. And this question was not very relevant maybe 10 years, 15 years ago. So today we have around 4,000 companies or maybe 3,500 companies traded. Half of them may not exist after 10 years. It's a very serious thing. So the permanent loss of capital could happen. So that's very important, and always give importance to the valuation. When you buy a stock, at a particular price, when somebody buy Paytm at 500 rupees, just taking an example, it's a recently hot stock. Everybody got affected, all the investors lost money. I think most of us, many people were bearish, including me. I was surprised about the valuation at which it came, it brought the IPO. It has come to some 1/4 of the price. So even at that price, people buy at 500 rupees. What is the valuation? You cannot buy a company at 500 rupees. It has got a market capitalization. Many small investors totally ignore, they don't understand what is the market capitalization or what is the market value of the company. They go by the ticker price, That's maybe good for trading, for intraday trading kind of things. But investing is important. So the valuation, don't overlook at valuations, whether it's a fancied sector or a company, or it's a traditional company with a lot of assets. All the companies need to have that valuation metrics in place. Yep.
So I really appreciated when you wrote this, when you were talking about loss-making IPOs. On Twitter, you wrote this: turnover is vanity, profit is sanity, but cash is reality. I mean, that really, touches on very deep levels, right? I mean, in a day and age where IPOs and valuations are being done so crazily, this makes a lot of sense, where you have to actually look into cash, because cash speaks above everything else, right? And again, there's one personal question I wanted to ask again, and this would probably help me in my investing as well. When we like a new company, how do we allocate capital to that out of our portfolio? Or how many companies are good enough to be in a portfolio? Because I always feel that whenever I made a portfolio of probably 15 companies, then after some days I like another company, then if I start researching again, I like another company. So that's a never-ending process, right? When does it end? When do you feel that, okay, I should stop my research? So how is that process? I mean, very actionable for me specifically, and I'm sure for others as well.
Typically in my portfolio, for the investors, and even for myself, I have a policy of having around 10 stocks.
Okay.
At a given time.
Mm-hmm.
Maybe 8 stocks or 10 or 12 stocks. So that's something I have been practicing. It evolved as it is, not with the intention to keep 10 stocks. And you know, some investors used to go for 100, 200.
Yeah.
I know people with 500 stocks in Kochi.
Right.
That's
Nifty 500.
Not very large portfolio, not large amount, still 500 stocks in the portfolio. Right. So even if, some of the stocks, what he identified goes by 5 times, there won't be any big difference in the total thing.
Yeah.
So concentrated portfolios make sense to make big money when you go right.
Yeah. But again, so what's the logic there? How do you stop at a point? I mean, wouldn't you always find another good company? So that goes up from 10 to 11, then another good company goes to 12. So do you actually put in conscious effort to stop researching when you have 10 companies? Or you exit a company?
No, you see, in our market, now new stocks required because the time passes, maybe some of those companies might have gone to rich valuations. So we may go into new companies, new stocks.
So you exit?
Yeah. So totally in our PMS, we may have around 25 stocks.
Okay.
But typically one client will have an average of 10 stocks.
Okay. And then again, another actionable question would be, this is a famous saying in the market, right? Entering is kind of easy, but knowing when to exit is difficult.
You are listening to Saurabh Mukherjee.
Yeah.
There is no question of exiting.
Yeah, again,
sometimes.
Super long term.
Yeah,
right?
but at the same time, in a dynamic market like India, it makes sense to have reasonable churning and, taking advantage of the short-term, medium-term excessive price movement. So an investor can exit when you see a stock moving by 2-3 times without significant change in the fundamentals. Maybe the stock is still good, but there can be time-wise correction. Sometimes the stock moves fast 2-3 times, then it stays there for 5 years.
Correct, yeah.
So somebody can shift the money into more productive, more growing stocks.
Right, sure, yeah. And then I was going through your Twitter where you are super vocal. So one thing I really want to talk about is the loss-making IPOs, which again, you are very vocal about. So that's something that we have already covered. So as you rightly said, price and cash. So the real fundamentals are what we should look at rather than any vanity metric. But going ahead to something else that you said with a lot of importance, 90% of unicorns are bubbles waiting to burst.
In that mood, I might have talked. I was very apprehensive about these new issues.
Yeah, that's what. I'll make the question maybe a bit more clear for you. So when you see IPOs from this so-called new age startups, tech companies happening at such high valuation, do you think that the private market valuations are crazy high? So is it because of VCs and PEs entering the market who are pushing up the private market valuations and then dumping it off into the public market?
I think that space is going through too much of manipulations and unethical practices.
Yep.
In many cases, I know promoters, VCs, earlier investors and the new upcoming investors, operators, not investors, they all collude, and sometimes maybe in the IPO pricing could be reasonable.
Yeah.
But after the IPO, it is getting rigged up and, by jockeys, and this is possible only because of the newbies are after these fancies, and they can be misguided easily.
Correct.
Which is a very unhealthy system. I don't know, regulator cannot do much about it. These all are legally happening, technically legally. So nobody can help it. I think that tweet I made during that Paytm IPO, where I was feeling it's overpriced.
No, it was a common feeling for a lot of investors across India, where again, I'm just re-establishing what you've been saying, where it doesn't matter if the company is a new age tech startup or an old company, what matters at the end of the day is its actual valuation and cash, right? So that's what we should look at, for sure.
Again, these unicorns and all, mostly in the technology sector, we cannot underestimate the technology boom. Again, going to happen. The next stage of boom happening in India. We are on a very strong wicket in this. All these disruptive technologies like 5G or the automation, genomics. And everywhere, India has a huge role to play. And this is one most important ingredient in India's economic growth going forward.
No, that's exactly what I wanted to ask next.
Now you just take your Bangalore, where I think Sharik is in Bangalore now. So Bangalore is the most important, that startup ecosystem in the world after Silicon Valley.
True.
It's not a small thing. So we will be having more hubs in India coming up. So the technology world is going to be, India's.
Right.
Already we have a very dominant role to play.
Definitely.
So, but in our economic growth, this is going to be very, very big.
Yeah. So since we're mentioning about new age technology, so let's anyways address the elephant in the room. Let's talk about blockchain, cryptocurrencies, and Web 3.0, right? So again, I read something which you very interestingly wrote, where you said that in your last 31 years of career, a single person in your village hasn't come to you asking for equity investing. But all of a sudden, people are coming to you asking whether they should invest in Bitcoin, right? I mean, that's the kind of shift that we are seeing, right? So what do you think about that? What are your thoughts about investing in crypto? Do you do it personally? What are your thoughts?
As on today, see, I'm not an expert in that, but all these people investing in India today in crypto, they are only gambling. They don't understand it. 99% of them do not understand. They are only gambling. So as on today, it's a gambling instrument. And I personally never believed in a currency. If you use the word currency, only governments, sovereigns can issue currencies. Warren Buffett, many others also have talked about this. So I don't believe in that, and I will never invest in cryptocurrencies in my life. So, in fact, somebody was here. I think I saw his relative. There was my elder son's classmate. His name is Arjun Dennis Paul. So he came after the 12th. He came for internship in my office. At the time, yes. Yeah. So he was telling me, Uncle, there is something very interesting I want to discuss with you. So I had never heard about cryptocurrency, this Bitcoin in those days. This is more than a decade ago. So he told me, Uncle, I am buying something called Bitcoin. He was buying at 0.8, means 80 cents, 90 cents, $1, up to $1.2. Yeah. So he was showing me some statements and all. So I scolded him. See, so I was very much against that. Right. And he was very sad, and so after many years, he recently called me when it crossed $10,000, not now, a couple of years ago. So then so he was very sad even that time. Yeah. You scolded me when I talked about this. Yeah. So I told I still have the same stand. I can't help it.
Right.
So he's still holding some of that, even though he sold mostly at 10, 15, and some at $150.
Nice.
So it's a principle which I don't do what I do not understand.
That's great.
So if that is the policy, I don't think this Bitcoin will have this kind of a fancy today.
Yeah, so that's a very important sentence that you said. Don't do something that you do not understand, right? So when we say that even in the stock market, derivatives market, numbers say that 95% traders or stock market participants lose money. So I feel that they lose money in the stock market also because they're doing stuff that they do not understand. A lot of people do not understand how to value stocks. They still invest into the market, right? They don't know how to do maybe day trading or F&O trading. They still try their hands because someone on social media or someone said there is an aspirational value. So people lose money in the stock market also because they are ignorant. They don't understand it. Similarly, in the world of cryptocurrency also, people are losing money probably because they are doing stuff that they do not understand.
And cryptocurrency is difficult to understand.
Yeah, true.
As somebody was telling you, there is fundamentals, there is intrinsic value, there is more clarity when you analyze a stock.
Right.
So there's no doubt about it. And one more thing, we were talking about these newbies. A lot of them I know, those who entered into 2020, maximum people started entering into the stock market. New people. A lot of them made big money.
True.
And I know a lot of them, maybe 50% of them have started investing on the other side.
Yeah.
So those people are doing well.
Correct.
And others will be learning to do that. So anyway, new people coming to the market is very good, most welcome. This 9 crore accounts, it can still go to 15 and 20 crore accounts in India.
Yeah. Still the stock market
the real game will start.
The penetration in India is only 3% of the population. So
yeah, it has gone up.
Yeah,
it's gone up now.
Oh, right.
3%.
Yeah, still a lot of
in the last
upstream.
2 years, it has gone up in a big way.
Correct. Yeah, that's true. So again, crypto investing, I mean, see, when we say that we do not understand it, I always feel that people do not understand how money works also. Right? If you actually go out and ask someone how, on what basis money is being printed in India or in the US and how the actual economic system of the world works, people do not understand as well. So I think it's just a matter of time. As time passes, cryptocurrency might become the new normal. So people would just take it for granted, wouldn't start asking questions about, hey, how does this exist, what it is, just like they're not asking questions regarding actual currency now also. And again, regarding the term cryptocurrency, which you also do not agree with, right? It's okay. I mean, even I stand with that because if you call it cryptocurrency, people actually relate it to becoming a currency. Where in today's world, cryptocurrencies are mostly not currencies. People agree that they're just tradable assets. They have some utility attached to it. So that's a different story altogether. So I would kind of conclude the session by again picking a bit of your brain. Where you yourself said that in the last 5 years, 2-3 years were not that bad, not that great for your fund, right? I mean, your AUM was going down. Maybe number of users were kind of going down, which is absolutely okay. I mean, it's about the equity market.
I don't mind the AUM going down and all. My problem was 2 years, 18 and 19, we had significant underperformance.
Correct. Yeah.
Anyway,
which is okay with the market, right? So 2 questions there. So one is, how are you? Do you get stressed at that point of times? And how are you managing stress?
I feel bad, and I'm not a businessman structurally. So I have been very passionate about it.
Right.
So the clients are happy. I'm always very happy. That's the only thing I'm looking for.
Correct.
Anyway, things are really looking up.
Absolutely, I'm sure.
I'm telling you now, the global events happening, including these geopolitical issues, and the COVID, what happened. See, the Western supremacy is coming down. That's almost very, very clear. The Asia, especially India, is going to be shining. There are all the ingredients. Now with this, the China, even a small portion of Chinese business moving to India, along with this PLI scheme, all these things happening at the same time, at the right time.
Correct.
That's why I'm extremely bullish if you see the next 5 years in India. And even the Eastern Europe, what's happening. I'm just telling another example. Eastern Europe has been cheaper, labor and manufacturing. So there is a huge activity happening in Eastern Europe. That is also got some kind of disruption. Again, going to help India. So and India's current regime has initiated many of these themes with many of these financial reforms like GST, ARERA, IBC, the banking reforms. These all are historical, and all the effects are about to start. And we have introduced the PLI scheme. PLI scheme is going to create approximately 5 to 6 lakh crores of revenue, additional revenue on a normal year after PLI. So this is, again, people are underestimating. So everything is pointing towards a fantastic future for equity investors and Indian economy for the next 5 to 10 years. I'm very confident about that.
Yeah, I was planning to give a conclusion, but you have given a much better one at that, so I wouldn't even try doing that. So anyway, such a fun, I'm absolutely thrilled having this time spent with you. So again, a living epitome of success in stock market from Kerala. Again, a state with such less penetration, a man to come out and build a personal brand for himself in this field is absolutely commendable. So thank you very much for being an inspiration that you are. We are spending time with us, so thank you very much. We could probably take a few questions from here.
Thank you very much, and I appreciate Dhanam Magazine and Korean and Maria, the way they have been working towards, the financial sector of Kerala, this geography. It has been wonderful, and thank you for giving me this opportunity. And including me, I think all of us are hungry and waiting for any other programs now?
Nothing at all.
It's
Just
for
in
dinner?
case audience has a question, we can probably quickly take one question. Okay.
Yeah.
We have an enthusiastic hand there, so. Mic is coming to you, sir. Just give me a moment. Yeah.
Sir, question is to you. You are a man of small cap and mid cap. In 2018 to 2020, there may be only one, maybe few stocks has performed. It was an underperforming for small cap and mid cap. But the scenario for 2020 to 22 is different. So are you still a mid and small cap man, or have you changed your mindset to broader market?
I think currently our portfolio is maybe 75-80% mid and small caps. And we are very comfortable. And that structural change happening in Indian economy, especially we all talk about, the transformation from the black to white economy, the unorganized to organized economy, is very relevant even for the small and mid caps. See, the listed companies in general are doing organized business. They have been always paying the taxes. So they have been competing with the unlisted, very, very small SMEs. So that movement is good for, in general, all the companies listed, if they are into the right business, a relevant business for the future.
Thank you.
Yes, since Mr. Porinju already, he mentioned, we're all hungry, so we should probably cap the Q&A session there. And I request Mr. Sharik to present a token of our appreciation to Mr. Porinju. A memento from Dhanam Publications will now be presented to Mr. Porinju Veliath by Mr. Sharik Shamsuddin. A great moment indeed. Thank you, gentlemen, for that very energetic, very enthusiastic conversation. I request you to join the audience now, and I quickly invite on stage Mr. Vijay Kurian Abraham to deliver the vote of thanks. He is the Vice President of Dhanam Publications.
Good evening, ladies and gentlemen. It's great to see everyone here after a break of 2 years. The last edition of Dhanam BFSI Summit was held in February 2022. We had just managed to hold it before the whole country went into lockdown. Nevertheless, over the last 2 years, Dhanam had organized numerous events, virtual events, to help the business community tide over the crisis. This is the first major physical event in 2 years. And going forward, we have a slew of events lined up, so stay tuned. Today's chief guest, Mr. Emma Kumar, was keen to attend the summit physically. Unfortunately, with the LIC IPO being moved to the next financial year, he was unable to make it here today. Having said that, despite his very busy schedule, Mr. Kumar took the time to send us a video message for the event, for which we are extremely grateful to him. I would like to express our heartfelt gratitude to our chief guest for this gesture. Another very busy person who took time of her busy schedule to be with us today is the LIC MD, Ms. Minnie Ipe, who delivered the keynote address. Ma'am, we are extremely grateful to you for being here today. Thank you. I'd also like to place on record our sincere thanks to Mr. Saurabh Mukherjee for having very graciously consented to speak at the event today. Sincere thanks to all our distinguished speakers, Mr. George Alexander, Mr. Porunju Veliath, K. Paul Thomas, Prince George, Abraham Tarian, Sharik Samsudeen, and Sanju Soni Kurian for sharing their knowledge and expertise here today. Thank you. A very special thanks to Senior Chartered Accountant Mr. Gopalakrishnan, without whose support we wouldn't be able to pull off this event today. Thank you, sir. This summit, which has now become a benchmark, was possible with the support of our sponsors and partners. Special thanks to Muthoot Finance for coming in as the presenting sponsor. And thanks to our silver sponsors, ISAF Small Finance Bank, Manappuram Finance, Reliant Credits, DBFS, Kerala Bank, Jubilee Chits, and our OH Media partner, Aishwarya. The MC Ardra has once again played an important role in ensuring the smooth conduct of the event. We greatly appreciate the effort and thank you. Special thanks to Abhijit for the entertainment and Ergo Events and Crowne Plaza for all the arrangements. A special word of appreciation to Team Dhanam, who have been working countless hours and days to bring together a summit of this stature. Thank you, team. Last but not the least, the success of any conference is the delegates. This time, I must say that we have been pleasantly surprised by the overwhelming response we received, a whopping 1,500 plus registrations. Unfortunately, due to space constraints, we had to restrict physical participation to less than 300. So our sincere thanks to each and every one of you present here today and everyone attending online for making it a grand success. You've truly been a great audience. Thank you. Until next time, thank you and good night.
Thank you, Vijay. And I'd like to take a moment to invite all our speakers back on stage for one group photo to capture this evening in a perfect frame. I'd like to invite all our speakers back on stage for a group photo. I'd also like to request our sponsor representatives to join them on stage, without whom this event wouldn't have been possible. Minnie ma'am, please come on stage. Mr. Abraham Tarian, please do join us on stage. Mr. George Alexander, Mr. Porunju Veliath, Mr. Sharik Shamsuddin, Mr. Sanju Soni Kurian. Apologies if I'm missing out on any names. I'm just calling out the faces that I'm able to see right now. I also like to request our sponsor partners to join us on stage, Ms. Deepthi Vijay Kumar and everyone else here. This really is a special moment because, like it's been mentioned, this is a physical event happening after a 2-year hiatus. So, a very special moment indeed for Dhanam. And a great starting point for all the rest of the amazing events that are going to follow. The august array of people who've made the Dhanam BFSI Summit 2022 possible. Ladies and gentlemen, loud round of applause for them. With that, we'd like to let you know that
A networking dinner is going to happen soon after, right outside. So we'll see you there and we will continue the conversations there. The cocktail counter will be right here at the rear end of this hall. Cocktails will be served there and food will be served outside. See you and enjoy the evening.